In a speech that you gave to the Australian Shareholders Association conference in May this year, you said, when historians of finance look back on this period, they will identify an unusual level of corporate complacency driven by relatively benign macroeconomic conditions and a long period of impressive return on equity performance.
Yes.
They will suggest that corporate leaders fell into believing that a sector capable of generating return on equities in the mid-teens for so many years couldn't be doing a lot wrong.
Yes, indeed, yeah.
And is that what you think has led to the misconduct examined by this commission, complacency?
I don't know if that's what's produced it, but had there been less complacency, I do believe that we would have seen less misconduct, indeed.
What are the other contributing factors in your view, Dr. Henry?
Well, we've heard some of them, I think, in this hearing this morning from our Chief Executive. There are many, but some go to the way that people understand their jobs, just what is their job, what is their objective in undertaking their job, how are they incentivised, rewarded, for what things are they rewarded, what controls are they subject to, and so on. A less complacent system would have been less tolerant of mistakes, would have been less tolerant of poor conduct, would have called it out earlier, would have done something about it earlier, would have changed remuneration practices earlier, I think.
So could I put a list of causes to you and see if you agree with me that these are causes of the misconduct that we have been examining in this Royal Commission? Poor culture within financial institutions?
So, again, I would say a better culture would have prevented some of the misconduct we've seen, yes indeed.
Poor risk management practices?
I know that sounds logical, but it's actually more difficult to pin the cause on poor risk management practices. Risk is a multifaceted thing. As I said earlier, most of the risks that we were dealing with in NAB when I first joined the board were to do with funding and liquidity risk, elements of balance sheet risk. We were also giving a lot of consideration to credit risk, which is the principal risk that banks focus on. Obviously, that consumed most of the time of the board risk committee at the time that I joined the board of NAB. But then we come to regulatory risk, compliance risk, and conduct risk. And I think in those non-financial risk components, regulatory, compliance and conduct, I think it is fair to say that there was insufficient attention given to the management of those risks. But I hesitate to say that it's all a risk problem. And the reason is because you can run your business through a risk prism. You can do that. But it would be better to have the customer at focus. Had we been more concerned about the customer circumstance, had we been running the business, all of us, in the interest of the customer, rather than the profit and loss and the balance sheet, those risk categories wouldn't have mattered so much.
Do you accept that another of the causes of the misconduct is remuneration practices that have incentivised the pursuit of profit but have not sufficiently promoted the interests of customers and compliance with the law?
In some cases, yes.
What about a lack of accountability at all levels within financial institutions?
Accountability to whom? I think this is a really important question. Because it's clear enough anyway, it's clear enough now with inside National Australia Bank to identify an executive who would be accountable for almost anything. And obviously the chief executive is accountable for everything. But then the board also has accountabilities. And a really important question, which I'm sure this commission is reflecting on as you prepare your final report, is to whom should boards be accountable?
And how would you answer that question, Dr. Henry?
Okay, so in the strict letter of the law, as you know, boards are accountable to their shareholders. After all, it's the shareholders who elect directors. It's the shareholders and the shareholders only who get to vote on remuneration reports, to exercise where they choose to do so, the so-called two strikes rule. It is the shareholders who are expected to hold boards accountable. The theory is that that makes sense because it's the shareholders who have most to lose. And the reasoning behind that is that shareholders are those who subscribe risk capital. It's the riskiest form of funding provided to the corporation, and therefore it makes sense for the shareholders to be the ones who determine who sits on a board and whether they should be re-elected, and whether in some circumstances they should be required to step down. But if you think about the instances of misconduct that have come before this commission, I would say that the people who we would see now as being most adversely affected have not been the shareholders. It's other people. Customers, of course, principally customers. There are circumstances, not so much in financial services, although there as well, where it's obvious that the activities of the corporation have done most damage to the workers rather than the shareholders. There are other cases where society discovers, usually too late, that the most damage has been done to future generations because of environmental damage. These aspects of the consequences of corporate activity go well beyond impacts on shareholders, and yet under our particular model, and this is a general model or a model of general application around the world, it's only shareholders to whom, at law, the directors are accountable. In my view, the public tolerance of that model of accountability has been pretty well eroded to zero. I would say that that is the principal reason, or anyway, one of the important reasons for a loss of trust in business.
I want to make sure I understand your answer to my question, which was your question, to whom should boards ultimately be accountable? Do I understand that answer to be that they should not only be accountable to shareholders, but they must also be accountable to customers, to those who, in your words, are most adversely affected by the operations of the entity?
Indeed, customers, but beyond customers.
And beyond to who? To future generations? Is that
Indeed,
what you...
why not?
Well, it's a question for you, Dr. Henry, as the chair of
I think
NAB's
it's a question
board.
to you as well, right? I think it's a question for this commission. Seriously, I do. It's a very important question.
Future generations of customers, is that...
No, sorry.
The community.
Beyond that, the community,
community.
yes, indeed.
So you believe boards should be accountable to our community now and our future community?
I do indeed.
And how should boards achieve that accountability, Dr. Henry?
Well, through their governance of the organisation.
But what are the concrete things boards should do to ensure that the decisions that they make are made against that backdrop of an awareness of their accountability to the broader community and the future broader community?
I think the first thing they should do is not seek to avoid accountability on an argument that provided we are looking after the interests of shareholders, we're doing everything that we could possibly be expected to do, or reasonably be expected to do.
You said that was the first thing. Are there other things?
Oh no, I think that kind of underpins everything, right? I think that boards should understand, and I think increasingly they do, that their responsibilities to the community go beyond their obvious responsibilities for shareholders.
In the speech that you gave in May this year, another topic that you talked about was the culture of financial services entities, and you said that building the right culture involves the identification of a motivating purpose and strong corporate values, talking to people about them and embedding them in the organisation. When an organisation has a strong culture, the vast majority of people actually feel uncomfortable acting in a different way. Do you recall that?
Yes, I most certainly do.
I want to ask you some questions about that statement. The first is you spoke about building the right culture. What is the right culture in a financial services entity?
It's a culture that is all about the customer, which puts the customer front and centre, and which is intolerant of practices which are not in the customer interest.
Do you think it's appropriate or even possible to prescribe a particular culture for financial services entities?
No, I don't think it is. I wish it were, but I don't think it is. It's not something. It's not something that can be legislated. I don't think it's something that can be even legislated in principles and left to regulators to either seek to enforce or even seek to have implemented in a supervisory capacity with particular institutions. Nevertheless, it is something which regulators, at least in Australia, it's beyond Australia's shores, regulators in the financial services industries have been taking a keen interest in. As you know, APRA has, for example, been taking a keen interest in risk culture matters since, I would say, about 2015. I remember we had NAB board had a discussion with the APRA commissioners. I think it was in 2015 about the importance of risk culture, and APRA and we then started on a journey on risk culture. That journey is ongoing. It's quite a long journey. We've done a lot more work on it recently. I think we have a better feel for the dimensions of risk culture that really matter for a financial services entity. I think APRA does too, but I don't think we're ever going to be able to write on a sheet of paper exactly what it is.
What do you mean by the dimensions that really matter, Dr. Henry?
Well, okay, so I think when we talk about the dimensions that really matter, I would say, Commissioner, that the most important thing is what the entity sees as its purpose. I think next to purpose, of course, is vision. What the entity sees itself as wanting to achieve over the next few years. Next to that is values, which really should be enduring principles to guide the behaviour of everybody in the bank. And then, of course, next to those is behaviours. And behaviours, it's the behaviours that evidence the culture, obviously. The drivers of culture, though, obviously go beyond purpose and vision and values. Those are positive drivers of good behaviour, of a good culture. But if those are not supported by systems of integrity, and that includes the organisational policies, it includes, for example, remuneration policies, it includes IT systems, and so on. If those supports are not there, then the aspirational purpose and the aspirational vision can actually be demotivating. And so the fundamental elements of a good culture have to include both the stuff from the top-down stuff in terms of purpose and vision and values, but also the foundational supports. I know there's been quite a lot of discussion in this commission about the importance of remuneration policy, for example, and that's important. Obviously it is. It's important, for example, that when poor conduct is revealed, that there are remuneration consequences. Oh, by the way, it doesn't have to be remuneration consequences. Of course, people could be demoted or people could be exited from the business. But fundamentally, it's about capabilities. If a business, in response to poor conduct, if all it does is continually impose financial consequences on people who are not equipped to do the job, performance is not going to improve. Indeed, most likely, performance will deteriorate even further. And the fundamental need is to ensure that you've got the capabilities supporting the business, and that's IT capabilities, but it's also human capital, the human capital capability, to be able to ensure that the business is capable of achieving its purpose. There has to be a strong connection between the two, between the capabilities and the aspirational purpose. Otherwise you get dysfunctionality, and that's corrosive of culture, obviously.
Do I take it from what you said earlier, Dr. Henry, that you think that there's a role for regulators to play in ensuring that financial services entities have a culture, at least with what you describe as the dimensions that really matter?
Yes, I do. Yes, I do, yeah.
And what does that role look like in your view?
Yeah, I think it's a role in the financial, in banking anyway. Let me stick to banking. I think in banking, it's a role best played by APRA rather than ASIC, for example, although even under ASIC's current legislation, for example, if you look at Section 2 of the ASIC Act, and you look at the principal purpose of ASIC, I think it's arguable that ASIC should be taking an interest in the culture of corporations in Australia. That would be in Section 2A, if I recall correctly. So I think that's arguable. But in respect of banking and superannuation and insurance, APRA certainly should be taking an interest in the culture of the organisations that it supervises, and I think it is.
You think APRA...
Taking an interest in the form of questioning, challenging,
Yes,
nudging,
I think so.
or beyond that?
Beyond that, indeed. Beyond that. So, for example, CPS 220, which I'm sure...
The prudential standard issued by APRA.
I'm sure that's been discussed a bit here. in that, APRA requires that the boards essentially make an assessment of the risk culture of the organisations for which they are responsible. And so that's going beyond the matters that you raised, Commissioner. And, you know, I have on a number of occasions participated in discussions with APRA commissioners about just the nature of a healthy risk culture of a bank. Early on, it must have been 2016, I think I participated in a workshop that APRA convened where they invited various bank chairs and other chairs, indeed, to talk about the elements of a healthy risk culture. I think that we're getting, at least I think we're now at a position where everybody agrees that this is a topic that must be discussed. You know, that, yeah, it's fundamentally important.
You mentioned CPS 220, Dr. Henry, which is the prudential standard in relation to risk management.
Yes.
And you mentioned the part of it that relates to risk culture.
Yes.
Clause 9 of that prudential standard deals with the role of the board.
Yes.
And one of the things that the board must ensure is that it forms a view of the risk culture
That's
in
right.
the institution.
That's right.
What more should APRA do other than ensuring that you and your fellow board members have formed your own view of the risk culture in the organisation?
Okay, so firstly, I don't know whether this is the appropriate forum to say it, but I'll say it here now anyway. I think we have said consistently to APRA, the word ensure is a bit strong. It's really difficult for a board to be held accountable for ensuring anything, just as it's rather difficult to hold APRA to that standard of ensuring an appropriate risk culture. Nevertheless, it is...
Can I just pause there for a moment?
Yeah.
Because I just want to take that up with you. If it's not the board who ensures...
No, it's the word ensure.
But someone surely must be responsible for ensuring that there is an appropriate risk culture. If it's not the board, who is it?
No, the board has the principal role to play
Yes,
in respect of the development
yes.
of the culture of the organisation. It's just the use of the word ensure. Model, lead, encourage, those words are more obvious than ensure. Ensure is a bit of a strict standard. But anyway.
This is in the context of the obligation on the board.
Yes.
Are there others then within the organisation who have a level of responsibility for risk culture that extends beyond modelling, leading and encouraging?
Well, certainly. So there are the development of, so for example, controls and monitoring. Not monitoring. I think we can actually say in that case, if you're talking about controls, we can say ensuring adherence to
Yes.
policies. Yep, that's okay. You can use the word ensure in respect of adherence to policies. But when you're talking about something like culture, ensuring a particular culture, look, it's a step too far. I didn't want to make too much of this point, although we've had any number of discussions with APRA about it. But your question about what more can APRA do, well, APRA has done more. As you know, following an APRA-sponsored review of the Commonwealth Bank of Australia, APRA required that all banks undertake a similar review, self-assessment review, which among other things, at least in our case, and I know you have this document, in our case, involved quite a detailed exploration of the culture of the bank. I think also through its leadership of the industry through its supervisory practices, APRA can influence the culture of institutions. And I think it is occupying that space.
You mentioned the self-assessment that
Yes.
NAB has done in response to the request from APRA that many entities across the industry do that in the wake of the CBA prudential inquiry. Have you read the current version of the NAB self-assessment?
Yes, I have.
And you've read then what it says about the culture within
Yes.
NAB. What concerned you in what you read about the culture of NAB?
Well, I don't think any of it was news to me. There are the review, and it was a self-assessment, so as much as anything it was, I mean, the board was involved, obviously, in reviewing the culture of the organisation. Many people were involved at various levels of the organisation. There was nothing surprising, really, because it was our assessment of ourselves. Nevertheless, we did identify a number of what we described as cultural inhibitors in the document, and these are not, as I said, these are not newly discovered cultural inhibitors. This was our distillation of problems that we realise we've been grappling with for quite a long time. It was a valuable exercise from that perspective. It allowed us to, not allowed us, it required us to put in one place or assemble in one place a distillation of a whole pile of issues that we've been grappling with for some time.
What were the cultural inhibitors identified?
The principal ones have to do with the first, I think, is a lack of, an insufficient intensity of focus on getting it right all the time for our customers. That's the first one, most important. Secondly, I think that our systems often let us down. Thirdly, that we don't always listen as closely, as intently to our regulators as we might, that we could learn more from them and more in a more timely fashion than we might have thought. And I know there are six. I know those are the three most important, at least they're the three most important to me. I don't have the document in front of me, you do, you can remind me, I'm sure.
Not consistently bringing the collective intensity or individual resolve required to fix complex issues.
Sounds right.
And while we have a strong commitment to customers, we have too often put other priorities first.
Yeah, it's
I only
true.
have 5, Dr. Henry.
You only have 5, I thought
I only
there were
have
6.
5.
Okay,
Do you think
all
there's
right.
a 6th?
Thank you.
So they were the cultural inhibitors, you would say not identified for the first time as a result of this work, but which are articulated in this document. And are these inhibitors that NAB is working to address?
Yes, we are.
Can I talk to you a bit about what's happening at NAB in relation to culture?
Yes.
Coming back to your speech for a minute, you talked about building the right culture as involving 3 things: identifying a motivating purpose and strong corporate values, talking to people about them, and embedding them in the organisation. Now, last year you and Mr Thorburn launched NAB's purpose, which Mr Thorburn gave some evidence about earlier today. And Mr Thorburn explained that the purpose at NAB is to back the bold who move Australia forward. Have I got that right?
Yes, you do, yeah.
And what does that mean, Dr. Henry?
I thought he explained it rather well. The purpose came from, we didn't come to this purpose quickly. You know, we didn't just go into a dark room and have a quick chat about what might look good as as a slogan for the organisation. The purpose statement was developed over a 12-month period on the basis of interviews with people right across the organisation at various levels of the organisation, looking at the role that the bank had played through its 150 or 160-year history, and the things that, and identifying the things of which, well, the things that we thought spoke most eloquently about the role that National Australia Bank plays in Australian society. And the things that we identified had to do principally with backing people who were doing bold things, but the bold things could be the development of a new product. For example, we backed the development of Vegemite. Vegemite failed on the first occasion. We came in again and backed it for the second time, right? And then Vegemite's become a global brand name. It was stories like that. It could mean that. It could mean backing a farming enterprise in times of drought, such as Australia is presently going through. It could mean backing a small business, and NAB, of course, is the major small business bank in Australia. But it could mean backing a young family that has just secured its first mortgage, and so on. These were the kind of stories. When we asked people in the organisation, what is it that motivates you about your work, these are the stories that came through. I must say, and I must have spoken to hundreds of people who work for NAB, myself. Once I heard making profits for shareholders. Once. All the other stories were about customers. And they weren't stories just about, oh, well, it's nice to be able to serve a customer in a branch, important as that is. Those were not the stories. The stories that people related to me, and I know Andrew had the same experience, were stories about backing people in times of difficulty. And we considered that the role that National Australia Bank plays in backing people, not just in times of difficulty, but anyway, in backing people, all of these stories contributed to the development, in some way, to the development of Australia, to the development of the Australian economy and society, and that this is something of which we should be proud, that there is something appropriately motivational about understanding that the corporation has an important role to play in Australia's development, and that it plays that role through the agency of its customers. This is quite motivational, and it's quite important that it be seen that way. And it does go back to the earlier discussion we were having about the matters for which a board should hold itself accountable. You know, when you've got a business that has 33,000 staff, 9 million customers, $850 billion of assets sitting on its balance sheet, about $300 billion of deposits sitting on its balance sheet. When you're aware of that, at some point it must occur to you that just about every decision that the bank takes is going to have an impact on somebody's life. Obviously a customer, but you put a few customers together, you're talking about a community. You put a few communities together, you're talking about a region. You put a few regions together, you're talking about Australia. And people who have the privilege of sitting on the board of a business that has that reach, to go back to the earlier conversation, they should be proud of having that accountability, not just to the shareholders, as important as that is, but an accountability to the country and for the country's future.
In September this year, Dr. Henry, you and Mr. Thorburn launched your new set of values and behaviours for NAB's employees, which sits underneath this purpose, is that right?
Well, the behaviours, yes, and the link between the behaviours and the values. The values had actually had been articulated some years earlier.
Could I ask that you look at NAB 00704900092, which is a report to NAB's board from a couple of weeks ago, from the 5th of November, which is about the final pillar in the One NAB culture plan. You've seen this memorandum before, Dr. Henry?
Yes, I have.
Could I ask you to turn to 0094, where we see a representation of the values and behaviours.
I'm sorry, can I actually scroll this, can I?
No, I'm sorry, someone
Oh.
will scroll it for you, Dr. Henry.
Right. Yes, thank you.
So these are NAB's values and behaviours, and I just want to ask you about some of them.
Yes,
The first one is passion for customers.
yes.
Get it right for our customers every single time. Take a
Yes.
stand for our customers. In what way do you want your staff to take a stand for your customers?
I want them to feel that they are encouraged, no matter what level they are in the organisation, that they are encouraged to speak up whenever they see the operations of the bank, its policies or whatever, not being in the interests of customers. That's what I want.
Do you think that's clear from take a stand for our customers?
Yep. I think so.
What about be bold, Dr. Henry? In what way do you want your staff to be bold? In what way do you want them to be exceptional?
I want them to put a high value on excellence, on always getting it right, or at least as much as is humanly possible. I want them not to feel intimidated by those who are above them, to feel that if they think there's something going wrong in the organisation, that they can speak to people above them in the organisation and get their message through to the highest levels of the organisation and, if necessary, to the board.
What about win together? What is it that you want won?
That's about corporate collegiality. It's more about the together than the winning, although the winning is intended to be motivating, that we come to work energised and motivated, but importantly that we do it together. But also, and it's really in that second behaviour under win together, that we understand that we're not going to be successful as a team unless we make it simpler and faster.
But what is it you want your people to win? Is it winning business from customers? What are they winning?
We want our people to be to know that they are part of a business which stands out among its peers. That's what it's about. That they feel proud of working for National Australia Bank because they see it as Australia's leading bank.
So you want them to help you win the public perception of you as the best bank in Australia?
Sure. Sounds pretty good.
I don't want to put words in your mouth, Dr.
No,
Henry.
no,
I
no.
am
And indeed,
interested
it's
in-
of course, and it's well. I think that was just a more eloquent way of saying what I was stumbling to. I think, and of course, it's consistent with our vision. Australia's leading bank, trusted by customers for exceptional service.
What was the process that NAB went through to choose these 5 values and behaviours?
Well, as I said, the values are somewhat older than the behaviours. The behaviours were developed through a piece of work, largely, of course, as you would imagine, at the executive level in the bank, but then workshopped with the board on a couple of occasions before we settled on these. But
Are there any other values that you'd like included but which didn't make the cut?
no,
Well, one value that many other banks emphasise is accountability. Is there a reason that that's not reflected in the NAB values?
don't think it's necessary. I seriously, I think if our people are living these values, then of course they are holding themselves accountable. They're holding themselves accountable for the customer experience. They're holding themselves accountable for the bank's reputation. They're holding themselves accountable for team effectiveness. They're holding themselves at least partly accountable for the morale of those that they work with. I think there's a high degree of accountability that's at least implicit in these values. I don't think we need to call it out as a separate value.
Even though other banks have.
Well, I wasn't even aware of that, you see. We run our own race.
But surely, Dr. Henry, you look at what other banks articulate as their purpose or their values.
No, I don't.
So you're unaware that one of CBA's values is we are accountable.
I was unaware of that until you just mentioned it, yeah.
All right, now if we go back to the report that this is an appendix to, the memorandum, we can see when it comes up on the screen that when it speaks of the 3 pillars in the One NAB culture plan, the first pillar was articulating the purpose, vision, values and behaviours. Is that right?
Yes, that's correct.
And the second pillar was early activities to drive this mobilisation
Yes,
of the target culture.
yeah.
What were those activities to drive mobilisation of the target culture, Dr. Henry?
Well, those haven't been undertaken yet.
That hasn't happened yet?
I think it's in the process, but it hasn't happened yet. I think we're still pretty much in the articulation phase.
So what will the activities to drive the mobilisation of the target culture look like? Can you see the reference to activities to drive the mobilisation about halfway down the page, Dr. Henry, following the articulation?
Right. I see that paragraph or sentence, yep.
So I just want to understand what the plan is for the activities to drive the mobilisation of the culture you're looking for.
Well, that's a reference to a set of activities to ensure that, well, not ensure, see, I've fallen into the trap of using that word myself, but to have the purpose, vision, values and behaviours understood by people right throughout the bank.
And that's what I want to understand.
Oh, right.
How are you going to do that? You've created this document that has the words that we've seen. How are you going to get people to understand, invest in, act in accordance with those words?
Yeah. So it goes back to the things that we've discussed previously, obviously. So the principal thing is talking to and discussing the purpose, vision, values of the organisation. Talking to people, particularly leaders, talking to the people that they manage about behaviours, what are appropriate behaviours, what are not appropriate behaviours. Ensuring that we have the systems in place that allow for the purpose vision to be delivered and support appropriate behaviours and so on. It's really to do with the building the capabilities of people in the organisation to be able to deliver on the purpose and the vision, as I said earlier. So, for example, we've come to, I mean, it's an obvious thing to say, but that in mobilising this culture, we can only have outstanding leaders in the organisation. And so there are HR programs that will be required, that are being rolled out to ensure an uplift in leadership capabilities in the organisation. That's one example.
Do you mean by that you're going to replace some of the existing leaders?
Train them, upskill them. Some are being replaced, of course.
And what are you going to train and upskill them in?
Leadership.
So you feel that some of NAB's leaders aren't adequately qualified to lead your organisation?
Well, that's not what I said, no, and it's not what I feel.
That's my question.
Yeah. No, it's not what I feel. What I feel is that this project is about an enhancement. And obviously, if we're going to achieve an enhancement, we need to do a lot of things better.
So you want them
And
to
one of
be
the
better
we
leaders?
want better leaders. Yes, we do. And I think it is the case, in fact I know it's the case, that we will be able to develop better leaders out of the people that we have, but in some cases that's not going to be possible.
Can I talk to you about some of the other words that appear in this document about how you're going to get the culture mobilised and embedded? This document talks about culture carriers. It talks about key influences. It talks about curating culture. What do all of those things mean, Dr. Henry?
Well, we don't have absolute precision around any of those things at this stage. We understand what the concepts mean in general terms, but I'm not sure I could satisfy you with in fact, I'm pretty sure I couldn't satisfy you with a very precise definition of those things.
Do you know how you're going to curate culture at NAB?
Sure, I understand the elements. I understand some of the dimensions of the curation of a good culture, and it goes to some of the matters that we've already discussed.
Can you identify those, Dr. Henry?
Well, indeed. So, ensuring that people have the capabilities to deliver on the purpose and the vision and achieve the vision of the organisation. Leadership capabilities, most importantly, to ensure that we have the systems that support people being able to do their jobs more effectively, and that has to do with reducing complexity in the organisation. So part of curating a better culture in the organisation is dealing with the complexity of the organisation. Some of it is in making the systems easier for people to use through digital means, and our digital systems have not always been as user-friendly as they're going to need to be. They've not always been as fail-safe as they're going to need to be. In many cases, there are workarounds. In many cases, as identified in the APRA self-assessment, the systems are so complex that the organisation has relied upon people to fill the gaps. We need to deal with those things, and if we don't deal with those things, then we won't be curating the right culture.
Another thing that this memo talks about is embedding culture through symbolic acts. And an example of a symbolic act that's given in this document is removing penalty interest for farming loans. and that was a change that NAB made after the 4th round of the Commission's public hearings in Brisbane and Darwin. Yes?
Sure, yes.
And what does it mean to describe that change as a symbolic act, Dr.
Yeah.
Henry?
So it means that it's something that people in the organisation can read, well, they can, in looking at it, understand what it means to say that this is a customer-centred organisation. It gives them a tangible example, like all symbols. It gives them something that helps explain what we mean when we say that we really do have a passion for customers.
Yes, I see. So symbolic in the sense that it demonstrates the focus being on the customer.
Correct.
I see. Now, over the page in this document, if we go to 0093 and we look at the final sentence of the final paragraph before the heading recommendation, we see a fit-for-purpose measurement approach will be developed that enables the measurement of culture specific to NAB's context and the cultural drivers of business performance.
Yep.
So do I take from that, Dr. Henry, that at NAB you haven't yet worked out how you'll measure whether you've succeeded in embedding this culture?
That's correct. I don't think anybody has.
Do you think it's possible to measure culture as this sentence suggests, Dr. Henry?
That's our ambition.
And do you have any idea, any plans for how you're going to do that?
That's a big piece of work in front of us, yeah.
So is there any preliminary thinking about how that can be achieved?
I hope so.
You're not aware of what that is at
Well,
this
I'm
point?
not doing it, no. I'm not doing it. I haven't seen the work yet, but I look forward to it very much.
Well, as chair of the board, what
Yes.
are the things that you will look for to assess yourself whether the culture that you want to create has been embedded at
Yeah.
NAB?
So if you think about the information that a board gets to see, of course, you know this. We get any number of dashboards which measure the performance of the bank against all sorts of principally quantitative, but in some cases qualitative benchmarks. Hundreds of them, although we are reducing the number, but anyway, hundreds of them. We see these reports typically in the Chief Risk Officer's report every month to the board, and I think we will know we've got a healthy culture when we see things like fewer incidents of non-compliance with external regulation, but also with internal policies. As you would know, our compliance risk rating in NAB has, I think for all but 1 month in the time I've been on the board anyway, has been red. We embed this culture, that cannot be red. If that's still red, then I will say this culture has not been embedded. So that's one indicator. It's a pretty crude one, but it's nevertheless an indicator. Regulatory risk. That's currently amber. As one issue gets dealt with, another one comes in and replaces it. If in, I don't know, 2, 3, well, let's say 3 years' time, regulatory risk is still rated amber, I'll say we don't have the appropriate culture yet. Conduct. We are giving a lot more attention to something that, the risk officers call conduct risk, but what we're really talking about is the appropriate treatment of customers. And we have set up, as you know, a customer remediation centre. We are capturing more measures of customer conduct, not just customer experience as revealed to us through Net Promoter Score. And as you would know, we track Net Promoter Score for the business overall. We track Net Promoter Score for every element of the business. We track Net Promoter Score for all 700 branches of NAB around the country. We and the board, we go out and we visit branches. We've been doing this for a few years now. We go out and we visit branches. We go behind where the tellers sit. And there's a screen in every branch and it tells you what the Net Promoter Score is for that branch. It tells you the Net Promoter Score for every banker in that branch. And so we are exposing ourselves to that sort of information. And for the bank overall, we have said there needs to be a substantial increase in the Net Promoter Score for the bank overall. It's part of the Accelerate One NAB plan that we ticked off on 12 months or so ago. But we also want to see a pickup in not just customer experience, but outcomes for customers. And so we are getting it's called verbatims, right? Verbatims to the board about poor customer experience. And we're trying to learn something from those poor customer experiences. And if we continue to see poor customer experiences of the sort that we have seen over the past few years, then again, that'll be another indicator to us that we don't have the right culture in the organisation. So there's quite a lot of things that we can use to inform ourselves about the culture of the organisation. I have found myself that a really important thing to do is that when you become aware of an instance of poor conduct, or even when questions are being asked about the conduct, I have found it useful myself to go out and talk to the people in the area and ask them how they feel about it. What do they think are the reasons for it? Whether they agree with it. And again, I don't think... I think that's something that the NAB directors, they have been doing, they're going to be doing more of.
Do you have a view on how long it's going to take to embed the culture that you want?
Could be 10 years, could be. I hope not. But I wouldn't be at all surprised. That would not be unusual for organisations that seek to embed challenging cultures.
You mentioned a number of times in that last long answer the Net Promoter Score and
Yes.
the use of the Net Promoter Score
Yeah.
by NAB. It's a significant part of the way you assess your performance with customers, is that right?
Sure it is, Jim.
And can you explain how it's measured?
Sure. So, firstly, there are two concepts of Net Promoter Score. There's a score which pertains to the organisation as a whole. I'm sure many people in the room would have had this experience. A survey organisation calls and asks you whether you are a customer of a particular company, particular business, and if you say yes, then the question is on a score of 0 to 10, how likely would you be to recommend this organisation to family or friends? And so that's a score that pertains to the view of the organisation as a whole. And then there are the so-called episodic Net Promoter Score measures, and I'm sure also everybody in this room has had this experience where you have had a customer experience, could even be servicing your car or having your car serviced, and then a little while later you get a phone call from somebody who says, thinking about that experience, how likely would you be to recommend that business to a friend or relative? Same score, same scoring system applied. And the way the Net Promoter Score works is that it's only the scores rated 9 and 10 that count as positives, and the scores up to 6 count as negatives, and those in between 6 and 9 are regarded as neutral, and you calculate the Net Promoter Score by subtracting the 0 to 6s from the 9s and 10s. And for NAB, and indeed, and here we do compare ourselves with the other banks, not surprisingly, the Net Promoter Score for the organisation as a whole is a negative, which means that those who rate us 0 to 6 outnumber those who rate us 9 and 10. And yet, I think it's true that for all 700 branches in Australia, the score is strongly positive.
And is that score based on the episodic?
Yes,
Yes.
the branch one is, yes, based on the episodic, yes.
And the episodic surveys happen relatively quickly after
They
the
do,
person
yes.
has interacted
They do.
with NAB?
Yeah, yeah.
And do you accept that in many cases where a financial services entity does something that is against the interest of the customer, it can take years for that to be discovered
By the customer or by us?
by the customer?
I guess, yes, that is true.
So
But it's probably even more true. It might take us years to discover it, even longer.
I want to focus on what's in the mind of the customer
I
at
see.
the time that they're answering that survey. You accept that at that point the customer might think that their experience with NAB was very positive. They were given the loan that they asked for, the product that they went in thinking that they needed, they were sold. But they might find out many years later that transaction was not actually in their best interest. Do you accept that?
It's conceivable. It's possible.
Well, let's. Part of what I want to talk to you about tomorrow in some detail is the fees for no service
Yeah.
dealings within NAB. Do you accept that customers may well have given positive feedback under Net Promoter Score surveys in circumstances where they had no idea for many years that they were paying fees without receiving a service?
I don't think we were even surveying the customers in those days.
Well, I want to understand, Dr. Henry, if you accept that a measure of customer advocacy that's taken immediately after the customer interacts with NAB is not necessarily a reliable indicator of whether there is a good customer outcome.
Well, absolutely I do. Absolutely I do. Sure.
It's
And we would not rely on that metric alone, and we don't.
because it's a measure of whether that customer is happy with NAB at that point
Sure,
in time
sure.
immediately
Sure.
following.
Sure.
So, given that you place such significance on the Net Promoter Score in assessing your performance and the perception of your organisation with customers, is that a problem?
If it was the only thing we were relying on with respect to customer outcomes, it would be a huge problem, but we're not.
So,
It deals with customer experience,
Yes.
not customer outcomes. They're two
Yes.
very different things, right?
So, how do you measure customer outcomes?
Mainly through complaints from customers, to be honest. Mainly. When something goes wrong.
So, you rely on the customer to come forward and tell you about the poor experience that they have had.
That is usually the case, yes. And it's probably impossible to replace that with anything else, but we do try other things. So, for example, the other things we try is to have more rigour around the development of products and the release of, if I can use this somewhat crude phrase, but release of products into the market, and truly assess them from a customer perspective before the products are rolled out. this is something we need to get better at. Obviously, if we were much better at that, then we'd get fewer customer complaints. So ensuring that, or trying to ensure that on all occasions, the product that is delivered to a customer is the appropriate product for that customer. That's something which involves both product design and involves and relies upon the behaviour of the banker who has the customer relationship, and them ensuring that it is indeed the right product for the customer at that time. So it's better to seek to influence those things rather than to rely upon ex post incident reporting and then find yourself in a world of customer remediation.
But a customer might never know that they have received inappropriate financial advice. Do you agree?
Yes, indeed, of course.
And a customer might take some time to realise that a loan that they've been given is a loan that ultimately they are unable to service.
And likewise, the bank might.
Yes, but
Yes,
I'm talking about
indeed.
how you rely on your Net Promoter Score to understand the customer experience, because I understand your evidence to be that the customer experience is very important to NAB.
Well, yes, but it's not as important. I've also said, I think, it's not as important as customer outcomes.
Yes, and customer outcomes at present you assess through the lens of customer complaints.
Principally.
Yes.
Yes.
And you accept that that requires the customer to have taken the step of complaining about their experience.
Yes.
And it makes it very important, do you accept, for you to look very carefully at the customer complaints that are made and for those customer complaints to be filtered through to the highest levels within the organisation?
Indeed.
All right. I see the time, Commissioner.
Yes. What time do you suggest we should begin tomorrow, Ms Hall?
I would like to suggest 9:45, Commissioner.
Are you content to be back here at, just a moment, were you content to be back here at 9:45?
Indeed, Commissioner.
Thank you, Dr Henry.
With respect, Commissioner, in the public interest, do you or an associate hold a vested interest in any of these major banks? Scargetta, 40 years federal tax practitioner.
And the short answer, Mr Scargetta, is no, I do not, and we will adjourn until 9:45.
The complicit judiciary in all of this needs to be looked at, Mr Commissioner.
Yes, Ms Hall.
Commissioner, could I start by tendering the document that I referred to yesterday, which was the memorandum to the board entitled Culture, dated the 5th of November 2018, NAB 007-049-0092.
That document becomes Exhibit 7.88.
Now, Dr Henry, I want to turn to the charging of advisor service fees and plan service fees in NAB's wealth business, which I'm sure you heard Mr Hodge asked Mr Thorburn
Yes,
some questions about this.
Sure.
Now, NAB subsidiaries, we know from NAB's submission to the Commission, commenced charging plan service fees in about 2012.
Yes, I believe that's correct, yes.
But advisor service fees had been charged from much earlier, from
Yes.
at least 2008.
2009, I think. Oh, well, anyway, 8, 9, I'm not sure.
Thank you. And in around the middle of 2014, NAB subsidiaries started identifying a number of issues in connection with the charging of both advisor service fees and plan service fees.
Yes, yes.
And in December 2014, one of NAB's subsidiaries, MLC Nominees, reported a significant breach about these matters to APRA.
That's my understanding, yes.
And there was also a significant breach report to ASIC at
To
that
ASIC,
time.
Yes, yes.
Now, towards the middle of the following year, in June 2015, Louise McCauley from ASIC wrote to Andrew Haggar from NAB. And if we could bring up that letter, which is Exhibit 5.160, ASIC 0038 0009 4847. You've seen this letter from the 5th of June 2015 before, Dr. Henry?
I'm sorry, I suspect I should have, but I can't honestly say that I have. That would be my fault, I'm sure, because I'm sure it was in a list of tender documents or a set of tender documents I was presented with.
Perhaps I could...
But it's quite a short letter, is it? Can I?
Yes,
I
it's
read
a
the first
two-page
page.
letter, and
Yeah,
we can
okay.
easily put both pages on the screen at the same
yes, here we are,
time.
yeah. Surveillance, yep, okay. Yep, sure, okay,
So perhaps if I direct your attention to some parts of this letter.
yeah.
At the time that this letter was received, Mr Haggar was the Group Executive for NAB's wealth business. We see that from the top of the document. And we see in the second paragraph that Ms Macaulay referred to ASIC recently having commenced investigations into Australian financial services licensees charging advice fees without providing advice.
Yes,
And further down the page, she referred to the breach that had been reported to ASIC on the 23rd of December 2014. Do you
Yes,
see
I see
that
that, yep.
reference?
Yep.
And she asked Mr Haggar to scrutinise, this is the following paragraph, to scrutinise the operation of all of the AFS licensees that form part of the NAB group, which provide personal financial advice to retail clients, to ascertain whether there are issues relating to incorrect charging of advice fees.
yes.
Now, do you think that you have not seen this letter before, Dr. Henry?
I just can't recall it. I'm not saying I haven't seen it. Maybe I have. I've read, as you would imagine, some thousands of documents, or reread some thousands of documents over the past few days. This may well be among them. But it doesn't matter, really. Does it? Maybe it does.
Well, I am interested in when this letter was brought to your attention for the first time, Dr. Henry.
Oh, I see. Well, if it helps, I'd be pretty sure I hadn't seen it before, let's say last week, but I could be wrong. My memory could be failing me.
So you don't recall seeing it before last week?
I don't.
All right. Now, I've been taking you through a chronology of
Yes,
events.
yes,
We're in the
yes,
very early stages of that chronology. We're in June 2015. But I do want to pause in the chronology for a moment and ask you some questions about what was happening in the business at this time, in the middle of 2015. Now, at that time, you weren't yet chair of the board, is that right?
That's correct.
But you were the chair of the board's risk
Risk
committee.
yes, that's correct, yeah.
And could I ask that you look at NAB 094 001 6778. Now, this is a memorandum prepared by, if we could have both the first and second pages on the screen, you'll see that it was prepared by the General Manager, Group Operational Risk and Compliance, for a meeting of the Risk Committee in May 2015, so shortly
Yes.
prior to the letter that I've just taken you to.
Yes.
And we see on the first page that the purpose of the memorandum is to highlight where the group has been operating with respect to
Yes.
compliance risk appetite.
Yes, that's correct, yeah.
Now, compliance risk is defined in the second paragraph of this document as the risk of failing to understand and comply with the laws, regulations, licence conditions, supervisory requirements, self-regulatory industry codes of conduct, as well as related internal requirements such as policies, procedures, organisational frameworks and standards. You see that?
Yep.
And in the paragraph underneath that definition of compliance risk, we see the following statement: the group has no appetite for non-compliance with legislation in the jurisdictions in which it operates or the voluntary codes it subscribes to, as articulated in the FY15 Group Risk Statement. The memorandum goes on to say the group's compliance risk performance has been rated red. We'll need to pan back so you can see that. Underneath the heading Compliance Risk Performance Status Update, the group's compliance risk performance has been rated red over FY14 and first quarter of FY15. Now, this was something you referred to yesterday, Dr.
Yes,
Henry.
yeah.
What did it mean at this time for compliance risk performance to be rated red?
At this time, and I think it's still the case, that a red risk rating against compliance, not so much regulatory risk, but compliance risk, refers to a breach of any one of those compliance obligations.
When you say any one of those compliance obligations, are you referring to the matters within the definition of compliance risk?
Yes.
Failing to understand or comply with the laws, regulations, licence conditions, matters of that nature?
And also internal policies, yeah.
So a red rating for compliance risk performance is a very concerning matter. Do you agree?
Yes, it is. Though I know you're aware of this, the Board Risk Committee spent some time during the course of 2015, and it's reflected in a Risk Committee minute late in 2015, if I recall, considering whether it was realistic to imagine that an organisation with thousands of individual compliance obligations could ever realistically not be in compliance breach. And it's extraordinarily unlikely, and that there would not be a red risk rating against compliance. I think in our so-called APRA self-assessment document, which I know you've read, you'll see that we identify more than 14,000 individual compliance obligations in the bank. It would be quite extraordinary if there was any point in time in which at least one of those compliance obligations was not being complied with. So that means that the compliance risk rating would normally be red. That doesn't... One of the challenges we have, and we made this clear to management in 2015 through the Risk Committee, is the fact that the compliance risk rating is always red should not be dulling anybody to the importance of these matters.
When will it be amber then? If you say a single compliance breach takes you into red, your system, as I understand it, has 3 categories: green, amber and red. How does that work when you say that a single breach would tip you into red?
It would have to be a breach that's regarded as material, and the materiality threshold depends upon the category of the compliance risk that you're talking about. So, and I don't have all of that in my head. I'm sorry, I wouldn't be able to answer the question about materiality with respect to various categories of compliance, but there are materiality thresholds that would be satisfied. I think it's the case that in all the time since, and despite the fact that the board, particularly through the Board Risk Committee, has been talking to management about the importance of improving compliance risk management, I think it's the case that the rating has been amber in 1 month, I think, in that entire, 4-year period, or 3-year period anyway. That doesn't mean that we are tolerating compliance risk breaches. After all, as this memorandum makes clear at the start, we actually have a zero tolerance for compliance breach. But that doesn't mean that we expect that there never will be a compliance breach.
But how does it work? You say you have no tolerance for that, but you also say that for a 3-year period it was rated red.
Yes.
What do we make of that?
Yes. So what we make of that is that If there is a compliance breach, it is something that has to be managed. We cannot be comfortable with a compliance breach because we have no tolerance for it. It has to be managed. But we're not naive enough to imagine that there will not be compliance breaches.
Can I tender that document? I want to come back to it, but I want to show you another document first.
Memorandum for NAB Principal Board Risk Committee 27 April 15 NAB 09400167778 Exhibit 7.89.
Could I ask that you be shown NAB 03000033940? Now, this is another memorandum for the Risk Committee and the Remuneration Committee entitled Assessing Risk Management Performance in FY16.
Yeah.
You'll see at the bottom of the page it appears to have been prepared in December 2015.
Yes.
Could I ask you to look at the third appendix to this document, which is at 3945, which sets out rating guidance under the heading Compliance Risk Settings. Do you see this?
Yes.
And this document records that compliance risk will be rated red when we have breached appetite and do not have an agreed plan to remediate the position.
Yes.
Now, is that what a red rating meant throughout the period that you've been referred to?
Yeah, I believe so, yes.
So it wasn't just about the fact of a breach, it was about appetite being breached and there being no agreed plan to remediate the position.
That's correct, yeah.
Right. I'll tender that document, Commissioner.
Memorandum for Principal Board Risk Committee and Remuneration Committee December 15 NAB 03000033940 Exhibit 7.90.
So NAB had been operating outside its risk appetite for compliance with no agreed plan to remediate that position for approximately 3 years, apart from the 1 month when this went into the amber rating. Is that right?
I think that's correct, yes.
All right. Now, could we go back to the document that we had on the screen earlier,
Yes.
which was NAB 09400167778? And if we look at the status update towards the bottom of the page and the reference to the red rating over FY14 and the first quarter of FY15, we see that the memorandum goes on to record that the red rating was the result of a number of matters. Ongoing regulatory breaches in wealth. Was that a reference to the inappropriate advice issues that NAB was investigating through its customer response initiative?
I think so, yes, the
Yes.
CRI, yes.
And conduct issues and associated remediation in the UK?
Yes.
Was that a reference to the mis-selling of the payment protection insurance by NAB's UK business?
I believe so, yes.
And we see it was also due to investigations connected with market practices in relation to the bank bill swap rate and the foreign exchange rate.
Yes. Yes.
And each of those matters ultimately resulted in NAB entering into enforceable undertakings with ASIC, and in the case of the bank bill swap rate matter, paying penalties of $10 million.
That's correct.
And there are also references to the red rating being due to issues in relation to NAB's compliance with its anti-money laundering and counter-terrorism financing requirements.
Yes.
So this was a set of serious compliance risk issues for the bank,
Well, yes.
which were appropriately reflected in a red rating for compliance risk performance.
Yes.
And as the chair of the risk committee at this time, did you regard that as acceptable, that the compliance risk had been rated as red, bearing in mind that that means no agreed plan to remediate these problems for the period of time that you've referred to?
Well, you know the answer to that question, no. You know I didn't regard it as acceptable, and it's reflected in the minutes.
So this was the situation with your approach to your appetite for compliance risk at this time, in the middle of 2015. Now, I want to come back to the sequence of events
Yep.
in relation to the advisor service fees and plan service fees against the backdrop
Sure.
of these matters.
Sure.
And we left off that chronology in June 2015 when NAB received the letter that I took you to earlier from ASIC that
Yes.
asked for a broader investigation at NAB
Yes.
of whether there were issues
Yes.
with incorrect charging of advice fees.
Yes.
Now, that letter having been received in June 2015, the advisor service fees issues were reported to NAB's board for the first time in August 2015.
That sounds right, yeah. Mhm.
Could I take you to NAB 03000021709? This is a paper that the board received in August 2015 called Summary of Material Regulatory Engagement. This is a style of document that the board received regularly to update it on NAB's engagements with regulators. Is
Every
that right?
month. Every month, yep.
And on the second page, 1710, we see a reference under Conduct, Investigations and Surveillance in the first paragraph to the bank bills swap rate matter. You see
Yes,
that?
I
And
do.
in the next paragraph, we see a reference to ASIC's foreign exchange investigation.
Yes.
And in the paragraph underneath that, we see a reference to the Customer Response Initiative dealing with inappropriate advice.
Yes.
And then in the paragraph underneath that, we see the reference to advisor service fees. ASIC
Yes.
has escalated to enforcement its investigation of NAB wealth breaches regarding overcharging of ongoing advisor service fees. The breaches relate to situations where clients requested the removal of advisors from their accounts, but where ongoing service fees continued to be charged and held within head office accounts. ASIC is not yet satisfied that the control failures are limited to operational processes of the issuing entities. They have requested that NAB scrutinise the operations of all AFSL entities within the group that provide personal advice to retail clients to ascertain whether there has been advisor or advice licensee misconduct. Internal investigations are underway with a final response due to ASIC on 24 July 2015. Now, this was the first time that this matter had appeared in a regulatory engagement report for the board,
I believe so.
but the report did not make it clear to the board that this was an issue that was being reported to the board for the first time. Do you agree with that?
Yes, I would agree with that.
And
yes.
should it have done so, Dr. Henry?
Yes, I think it should. Yes, I do think it should.
I'll tender that document.
Board memorandum concerning summary of material regulatory engagement, August 2015, NAB 03000021079, Exhibit 7.91.
And before we leave that document, Dr. Henry, in your view, did this document sufficiently impress on the board the seriousness of these events relating to advisor service fees and the engagement with ASIC?
I would say not.
Yes. Now, Dr. Henry, have you reviewed the minutes for the meeting on the 5th of August 2015 where this regulatory report was considered?
I believe I have, yes.
Have you seen that the minutes record that the board noted this report and there was a discussion about other matters contained in the report, such as compliance with AUSTRAC requirements,
Yes.
but there was no mention in the minutes for that meeting of the advisor service fee issues?
Okay.
Would it assist if I show you the minutes before answering that question, or
I
are you?
accept what you're saying. I think that's highly probable anyway, so yes, I accept that.
Do you recall there being any discussion at that meeting of the advisor service fee issue?
Well, no, I don't recall it. It's not to say it didn't happen, but I really don't recall it, no.
You don't recall it
No, I
being
don't.
drawn to the board's attention
Not specifically, no.
or being the subject of any discussion?
I don't recall that, no.
All right. Now, for completeness, Commissioner, I would like to tender the minutes of that board meeting, NAB 09200100653.
What's the date of the board minute?
The 5th
The minutes?
of August 2015.
Minutes of NAB board meeting, 5 August 15, NAB 09200100653, exhibit 7.92.
Now, on the same day as that board meeting, Dr Henry, the advisor service fees issue was also reported to the Risk Committee as part of a regular report by the Chief Risk Officer. Yes?
Yes, yes.
Could I show you that report from the Chief Risk Officer, NAB 03000021732? This is another standard form of document, this being a regular report from the Chief Risk Officer to the Risk Committee.
That's correct.
And this one is a report for the 5th of August 2015 Risk Committee meeting.
Yes.
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 Now, could I take you to the second page of that report, 1733? We see that next to wealth financial advice investigations, the Chief Risk Officer said to the Risk Committee, the high volume of regulatory inquiry and intensive resourcing required to deal to ASIC's investigations into NAB's wealth advice business continues, with NAB Wealth responding to multiple notices. These relate to 1, current and former advisors in relation to whom the licensees have had serious or other compliance concerns. 2, overcharging of ongoing advice service fees. And then there were some other matters listed there, including vertical integration and misconduct of various former advisors that had been notified to ASIC. You see that?
Yes, I do.
And at the bottom of that passage, there is a reference to the regulatory risk update in italics. Do you see that, Dr. Henry?
Yes.
Now, if we turn to the regulatory risk update at 1739, we can see that the advisor service fees matter. The advisor service fees matter is listed as the last item on that page. Do you
Yes.
see that? NAB Wealth continues to respond to ASIC's investigation of overcharging of ongoing advisor service fees. In regards to the breaches by the product issuing licensees, ongoing analysis in response to ASIC notices has estimated that approximately 12,000 customers were overcharged $2 million in aggregate between 2007 and 2014. We expect ASIC will monitor communication and compensation payments to customers and issue a media release on the matter. In response to a separate request by ASIC, NAB is investigating licensee revenue, compliance audit, and we'll see over the page, complaint data, to identify whether there has been misconduct by any of the group's advice licensees in regard to charging service fees where there has not been provision of service.
Yes.
So again, there was no indication this time for the Risk Committee that this was a new item.
No, that's correct.
No explanation of the background to the issue.
That's correct.
No explanation of the root causes of the issue.
Indeed.
Not even an explanation of the businesses that it related to,
True.
nor the possible contraventions of the law that were involved.
Well, that's true. Yeah, that's perhaps not so unusual, but that is true.
It's not unusual for the Chief Risk Officer's report to not mention potential contraventions of the law?
Well, it depends when the issue is being raised and in what context the issue is being raised. One of the, I'm sure you're going to get to this, but the practice, whether it's a sensible practice or not, is for breaches to be referred to ASIC and then for discussions to occur between ASIC and people in the bank about the probable nature of the breaches. So, and just what sort of breach are we talking about and which parts of the law are we talking about? So a view will be formed in NAB that there has been a breach brought to ASIC's attention. ASIC may say, well, yes, or it might say no, or it might say there's another breach we're worried about.
For a breach to be reported by NAB, NAB needs to have formed the view that there has been or may have been a contravention of particular provisions of the law.
Yeah, it may have been is the important point there.
Well, it's one or the other. It might be that NAB has formed the view that there have been.
Indeed,
But a
and it might
report
not.
also needs to be made when they've formed the view that it might have
Correct,
been.
that's
You
what I'm
accept-
saying, yes. Oh, so if you're saying, should the Chief Risk Officer have said, well, there may have been a breach of this part of, yeah, well, okay, fine.
Well, isn't that something the Risk Committee should know? This might contravene the law and these are the provisions that at the moment we're concerned might have been breached?
Perhaps.
Why only perhaps, Dr Henry?
Well, go to, if you think about the BBSW matter that you referred to earlier, that of course was raised with NAB by ASIC, and when it was raised with NAB, there was a suggestion that various provisions of the law had been breached. And it is NAB's view and remains NAB's view that those certain provisions have not been breached.
I understand that. I want to come back to the advisor service fees issue.
Yes.
Because surely someone within your business at this point was thinking about whether this conduct contravened the law, and if so, how it contravened the law.
Yes.
And surely those were matters that the Chief Risk Officer should have reported to the Risk Committee.
Perhaps.
Back to where we started,
Yes,
perhaps, Dr
perhaps.
Henry. And I'm afraid I still don't understand the reason for your hesitation.
No, I probably can't explain it to you.
There was no reference in this report, Dr Henry, to the possible penalties for this conduct.
No.
There was nothing about any measures that were being taken within the business to stop the problem from continuing to occur.
That is true.
There's nothing about how advanced NAB was in its investigation of these issues.
No.
And there was nothing about whether the 12,000 customers and the $2 million in overcharging appeared to represent the full extent of the problem or just the beginning.
Indeed.
Were they
And
all,
as we know, it wasn't known at the time.
it was just the beginning, wasn't it?
It really was just the beginning.
Were all those things that I've just taken you through, root causes, the businesses it related to, possible contraventions of the law, possible penalties, what we're doing to fix this, how far our investigation has advanced, are they all things that the Risk Committee should have been told by the Chief Risk Officer?
I do think so, but can I take it back to a point I made earlier? It's typically been the case that those matters, or work on those matters, has taken place after discussions with ASIC rather than before discussions with ASIC.
Well, should that practice change, Dr
I think
Henry?
it should, yes, I do. I really do.
So the Risk Committee should be advised of these matters at an earlier point in time before the ASIC notification. Do you agree with that?
I do. Indeed, I wonder whether it's necessary in all occasions to negotiate with ASIC at all, rather than simply notify and get on and fix it.
I'm sorry, I want to make sure I understand that answer. You wonder whether it's necessary to negotiate with ASIC
Correct.
at all.
Correct.
Are you talking there about Are you jumping ahead to the negotiations that ran for many years between NAB and ASIC in relation to advisor service fees and querying whether those...
I'm including that, but I'm making a general point
What are
about behaviour. And the general point about behaviour, as I indicated earlier, is that when a compliance breach is suspected
Yes.
or it's discovered, so somebody's certain there has been a compliance breach and it's significant, the practice has been to notify ASIC, and this commission has drawn attention to the fact that on numerous occasions the breach notification hasn't been provided in a sufficiently timely fashion. That's one issue. The other issue, though, is, which I'm referring to, is that the practice has been to make the notification to ASIC and then effectively negotiate with ASIC what the outcome should be. And what I'm suggesting is that on reflection, and the board has had has been quite reflective about these matters, particularly in relation to ASF and PSF. But on reflection, that doesn't appear to be, and certainly would not always be, the most sensible way to operate.
Well, it didn't serve you well in the
Did not
advisor
serve us
service
well.
fees.
It did not
and
serve us
service
well.
fees
It didn't
issue,
serve
did
the
it?
business well. No.
So looking back on that experience, and I want to take you through the events in a little bit more detail, but what do you say NAB should have done?
So, of course, I've asked myself that question many times, and in particular I've asked myself the question, what should the Board Risk Committee have done? What should the Board have done? Of course, a Board cannot and should not manage the business. That's almost axiomatic. But the Board does have to be accountable, as I was saying yesterday, for the impact of the business, and including impact with regulators and with the community generally. And the Board has to take responsibility for the reputation of the business. And there's absolutely no doubt that the reputation of NAB has been tarnished considerably by these matters and the way in which they've been handled by management. There's no doubt about that. And so I have asked myself the question, and the Board has discussed this on a number of occasions, what should we have done differently? We all agree we should have done something differently. Honestly, I'm not sure exactly what and when. My feeling is, though, I wish that we had said to management, certainly 2 years ago, perhaps even earlier, that we had said enough is enough. Forget about negotiating with ASIC, just do it. Now, the risk with that...
Do what before you continue, Dr. Henry?
Remediate customers.
Thank you.
Remediate customers. Do what's in the best interest of the customers, as I was saying yesterday.
Yep.
The risk with that, of course, and I reckon the Commission can help us with this. The risk with that is that, we could undertake of our own volition a customer remediation program, only to find in 10 years' time ASIC come along and says, well, we don't think you did a good enough job. And we find ourselves going through another remediation program or find ourselves in court. I would like to find a way of us being able to secure remediation without having to negotiate with ASIC, but to be able to do it in a way where we are protected from future ASIC action. And if the Commission can help with that, I think you'd do us all a great service.
Well, why are you so concerned about future ASIC action? What about proposing a customer-centric remediation program
This is what we're doing.
to ASIC? But it's not what happened with the advisor
No,
service
it's not.
fees and
No,
plan
it's
service
not.
fees, is it? It's
No,
far
it's
from
not.
what happened.
Correct.
So if you propose a remediation program that is focused on customer outcomes and putting customers back in the position that they ought to have been in but for the misconduct of your organisation, is there really a threat of ASIC action that you need to worry about?
But not in that case, but you've just described what we were doing. You just described the negotiation process I'm talking about.
I was I suggest to you very strongly that that is far from what you were doing, Dr. Henry. This was
Yeah,
not
okay.
a customer-centric remediation program. This was a remediation program that did not prioritise customer outcomes.
No, I do agree with that, but nevertheless, supposing that that had been our intention, supposing it had, it may have taken years, nevertheless, to negotiate with ASIC. That's not good enough. It is not good enough that we submit our customers to that process, where it may take years to negotiate with ASIC.
Why do you think that
An
would take
outcome.
years? If you propose to ASIC a customer-focused remediation program that was designed to restore your customers to the position they ought to have been in, why do you think it would take years to negotiate that with ASIC?
Well, we might have a different view on what ought means from what ASIC has. And for example, and you've seen it in the materials relating to this case, that in some circumstances ASIC will say, well, this is an industry-wide issue, and we're looking at NAB's approach. We're also looking at the approach of others, and we're not prepared to tell you whether we're happy with your approach or not. Keep going.
It seems a very unlikely scenario, Dr. Henry,
I can tell you it's quite a probable scenario.
that ASIC is not prepared to comment on your remediation proposal.
Not prepared to tell us whether it's something that, when there are industry-wide issues, they will be comfortable with at the end of the day. It's almost like on occasions, it's almost like that game that children play. You're getting colder, you're getting warmer.
Well, I want to suggest to you from the documents that I'll take you to that ASIC was very clear in relation to advisor service fees, that the proposals that were being put by NAB were not adequate to address customer detriment.
Yes, there is. I know there are documents before the Commission which indicate that that is the case.
All right, perhaps if we could move forward in the sequence a bit. And you said at an earlier point in time, when you were reflecting or speaking of the reflection of the board and the risk committee on what it could have done differently throughout this process, that you weren't sure what and when. And I want to make some suggestions to you as we go through these documents. Can I suggest to you, firstly, that both the board and the risk committee, in light of the reports that I've just taken you to about these matters at this time, should have asked for more information about these problems, the causes of these problems, and what was being done to fix these problems.
Fine.
Well, do you agree with that, Dr. Henry?
I can understand your view, certainly, in retrospect, and I wish we had. Yes, I
So
do
you
wish we
agree
had.
that that should have been done?
Yes, I do.
I'll tender this document, Commissioner.
Report of Group Chief Risk Officer 5 August 15, NAB 03000021732, Exhibit 7.93.
Dr. Henry, have you reviewed the minutes for the meeting of the Risk Committee on the 5th of August 2015 at which this report, the report of the Chief Risk Officer, was discussed?
I believe I have, but could you refresh my memory, please?
Yes, well, I'll bring them up. They are NAB 009200112447. Do you recall this document, Dr. Henry?
Yes. Yes, I do.
And if we turn to the second page, 1248, we see the part of the minutes that relates to the Group Chief Risk Officer's report that I've just taken you to. Do you see that?
Yes.
And the minutes record that the Chief Risk Officer provided the committee with an update on recent engagements with APRA, ASIC and AUSTRAC. You see that?
Yes.
And then the minutes record questions from the committee on a number of aspects of the Chief Risk Officer's report. Perhaps if we could, yes. And the Chief Risk Officer's response to those questions, do you see they are the next two parts of the document?
Yes.
And there is no mention there of any questions from the Risk Committee or response from the Chief Risk Officer to the advisor service fees issue.
That's correct.
So do we take from that that the advisor service fees issue wasn't drawn to the attention of the committee during the meeting?
It's very probably the case. I can't say for sure, obviously, but it's very probably the case, yes.
And that the committee asked no questions about it?
That's very probably the case, yes.
Now, I asked you this question in relation to the board materials. Do you think that the information that the Risk Committee was given about the advisor service fee issue was sufficient?
In retrospect, no. I mean, looking at it with the benefit of hindsight, no.
Is the description that we saw in the Chief Risk Officer's report about this issue representative of the sort of information that the Risk Committee still receives about incidents such as this?
It's a hard one to answer, you know. I mean, certainly with respect to ASF and PSF, obviously not, but events have moved on. Your question is a hypothetical, I think.
No, it's not a hypothetical. I want to know if the information is still presented in a similar sort of way in relation to incidents in your current Chief Risk Officer reports for the Risk Committee.
You're saying an incident such as, I think your question was an incident such as this, wasn't it?
I'm sorry, but in case I'm confusing you, which I
Yeah.
suspect I might be,
Yeah.
for a new incident, for a different incident, I want to understand if the way this information was presented is still typical of the way information about incidents is presented to the Risk Committee by the Chief Risk Officer.
It could be. It could be. I'm not seeking to take issue with you here at all. It certainly could be. There is a risk that that's the case, yeah.
A risk that that's the case.
Yeah.
And what about the earlier document that I took you to for the board, the regulatory report? Is
Yeah.
the information that we saw in that document about the advisor service fee issue typical or representative of the sort of information, content and length that's provided to the board in the regulatory reports these days?
They're getting longer.
Are they providing any more of the sorts of information that I've directed you to?
I hope so, but I hope so.
It's only a hope, Dr. Henry. You can't say whether it is the case.
I think the problem, one of the problems here is that with the benefit of hindsight, it can be clear to a board, as it is in respect of ASF and PSF. It's clear to the board now. What does trouble me, of course, is that there could be something, a new issue that management has become aware of, and which has been brought to the board's attention, but not in a sufficient, not in a way that would satisfy the tests or the requirements, the expectations that you listed earlier, which I think are very reasonable expectations. It's possible.
Because you still receive those regulatory
Of course,
reports on a
yes.
monthly basis.
Yes, we do.
But you cannot say to the Commission that this sort of problem with inadequacy of information has been fixed in those reports.
I certainly hope it has been fixed, but there is always a risk that issues are not being elevated to the board at the appropriate time and in the appropriate form. There is always that risk, of course.
Do you think more needs to be done at NAB to address that risk, Dr. Henry?
Well, we have done a lot more, as you know, and I'm sure it is the case that more does need to be done. And as you know, we have, for example, increased the number of compliance resources in the business. I wouldn't be at all surprised if over the next little period, let's say 12 months or 2 years, we find that we, on assessment, that we should be increasing the number of compliance resources.
What I'm asking you about is not about compliance resources in the business, it's about the information
Yes, I
that
understand.
finds
No,
its
I
way to the
understand.
board.
I understand, but you know, there have to be, presumably there are reasons why information is finding its way to the board, information is not finding its way to the board in sufficiently timely fashion, or in the manner in which it is finding its way to the board. My sense of it is that, but it is a sense. I can't give you the 100% guarantee that you seem to be after, but and I'd love to be able to do that, obviously, as chairman of the board. But my sense of it is that right now there is a much heightened level of awareness across the executive leadership team of NAB, and particularly in the areas of risk and in fact all dimensions of risk, but also compliance and regulatory compliance, and also, as I said yesterday, conduct. That's my sense of it, and I do see it, I see evidence of it in the behaviour of the senior executives and in the quality of the conversations that we have. We have, as a board, open conversations with management about these issues now, as distinct from closed conversations. You understand the distinction. And so I think there's a culture of openness and engagement and common ownership of problems. There are many reasons for that, one of which is that the board late in 2015, or at least the Board Risk Committee late in 2015, expressed considerable frustration with the poor compliance record of the business as revealed in the red compliance risk rating that you referred to at the start of this session. And we made the point, but really to underline the point, that the board takes these matters very seriously, and you know, because we have a zero tolerance for compliance breaches, there ultimately have to be consequences of some sort.
Well,
but
Just,
the issue is culture.
Sorry, finish your answer, Dr. Henry. I didn't mean to cut you off.
I'm sorry, yeah, I'm sorry. I was just going to say, the issue is really a cultural issue.
Well, apropos of that, and to revert to a topic that was discussed 5 or 10 minutes ago, is it important when either there has been or may have been a breach of financial services law that's a material breach, that the entity, in your case NAB, take primary responsibility for deciding what should be done to fix what's happened?
Yes, yes.
And does that entail two things? One, not waiting for ASIC,
Yes.
and two, acting in an ideal world for reasons that are obvious to us both, hoping that ASIC is in the same paddock you are,
Yes.
but regardless of the expressed view of ASIC, that the entity takes primary responsibility for what it believes
Yes.
has to be done to fix it.
That is very strongly my view, Commissioner, and the board has discussed that on a number of occasions, specifically in respect of ASF and PSF. We've learned a lot.
But it leaves primary responsibility, therefore, yes, ultimately with the board, but primarily with the business, that the board is expecting the business, one, to identify,
Yes.
two, to identify, in fact, what has happened as well as what
Yes.
might have happened,
Yes, yes.
and three, then decide, well, what's to be done to fix it and how
I
do we
agree
do
with
it?
you 100%.
Yes.
I agree with you 100%. I think our habit, and it is a habit, of going to ASIC and seeking to negotiate an outcome with ASIC, I think that's led to elements of dysfunction, and it has certainly contributed to an insufficient pace of remediation for customers. It has. And I'm not happy with it, and the board is not happy with it, and we do have to find a different mode of behaviour. I
But
mean,
it
maybe...
also leads to the mindset, well, what's the best deal we can do with ASIC?
Exactly.
And
It's a deal because it's a negotiation.
Yeah.
It's not right. It is not right. And I don't know, in other areas of the law, as you'd be familiar, there are other approaches that are followed. One that has, I have insufficient expertise in this matter, but you certainly have sufficient. But I have wondered whether in this case, NAB should not have, years ago, funded some of our customers to take us to this place, to this federal court, and get an outcome.
To SUNAB.
Yes. It happens in other cases. As you know, I was for 10 years Treasury Portfolio Secretary. The Commissioner of Taxation behaves in this way quite a lot. He has a budget to fund lawsuits against himself, in that case to provide law clarification of the law without having to, anyway. And I have wondered whether, I don't know, but it's something that I have wondered whether, in retrospect, we shouldn't have done that to get early clarification.
Why should it come to that, Dr. Henry? If management and the board are doing their job, why should you need someone to sue NAB so you can sort these things out?
Okay, so the question is the law sufficiently clear that anybody can come to that view? That's the question. Who knows?
well, can I just tease that a little? The triplet, which I never get in the right order in 912A, is honest, efficient, fair.
Yes.
Those ideas are ideas of disarming simplicity.
Mm.
The board, above all else, will have its view, will it not, about efficient, fair and honest.
Yes.
And if what has happened contravenes that standard, does it not follow inexorably that something needs to be done about it?
It seems simple when you say it. It's pretty challenging, really, for boards. It is pretty challenging. And maybe that's it. Maybe it's as simple as that. But, as you know, in these businesses, there are large numbers of people who are engaged in regulatory compliance. There are legal teams. There are people who deal every day with ASIC, discussing these matters and what the requirements of the law really are. And the board will have a view on those matters, but is the board's view always on those matters going to be the view that ASIC agrees with, or which a court would agree with? I don't know. But I do think that increasingly boards are asking themselves that question, and certainly the NAB board is, and you'll see that appears in some of our minutes where we have actually put back to management and used those precise words that you'll find in the Corporations Act 912A, put back to management that question. And I think you will see boards doing more of that. That's probably all I can say on that.
Why aren't they doing it now, Dr. Henry?
There's an expectation, I guess, that management is doing it in the interests of the corporation, and that what management needs from the board is guidance on particular issues, but not every matter. And the risk here is that, which you have raised this morning, is that management will have taken a view before a matter gets to the board about how the matter might be presented to the board. And I'm not suggesting that there's any ill intent involved in that. It's just a matter of fact that not every matter gets presented to the board in a way that would alert the board to the importance of that question. That's all.
This was one of those matters.
I think it is, yeah.
Could I tender the minutes of the Risk Committee meeting on the 5th of August 2015, Commissioner?
NAB 092 001 1247, Exhibit 7.94.
So I've taken you to documents about what was happening in August 2015, Dr Henry. In December 2015, two of NAB's subsidiaries, MLC Limited and MLC Nominees, reported significant breaches to ASIC in relation to the plan service fees issue. Now, again, I want to pause in the chronology there at the end of 2015. It was December 2015 when you became chair of the board.
Yes, that's correct. Yeah.
And at that time, Mr Armstrong took over from you as chair of the Risk Committee.
That's correct, yeah.
And in the first half of the following year, 2016, APRA conducted a series of prudential reviews of NAB.
Risk governance reviews, I believe.
One of them related to risk governance and the other related to compliance and remuneration.
Yes, that's right, yeah.
I want to ask you a bit about both of those.
Yeah.
If we go to the risk governance review first, NAB 007 002 0008. So this is a letter to you,
Yes.
dated the 28th of April 2016 from APRA regarding its prudential review into risk governance matters at NAB.
Yes.
And we see from the third paragraph of this letter that APRA explained why it was conducting this review. For some time now, APRA has had a view that NAB has been more vulnerable to breaches and prudential issues than peers. APRA recognises and acknowledges the positive steps that NAB has taken in recent years to strengthen its risk governance. However, we are of the view that there is further to go. This has led to our focus on NAB's risk governance framework this year. Now, if we turn to the report annexed to this letter and we turn to 0011, we can see that APRA required NAB to make a number of changes as a result of this risk governance review. Do you see that?
Yes.
In summary, APRA requires that NAB develops and implements a plan to address the specific findings in the report and to achieve the following overall outcomes. And there were three overall outcomes referred to there. NAB needed to develop an effective risk appetite framework that provides clear and prudent limits on management risk-taking and which is enforced through proactive management of the bank's risk profile.
Yes.
NAB needed to develop clearly defined roles, responsibilities and accountabilities for risk management. And NAB needed to develop monitoring and reporting at the board and management risk committee levels that provides comprehensive, transparent and forward-looking assessments of risks relative to risk appetite. Those were the things that APRA required NAB to do as a result of this risk governance prudential review.
Yes.
Now, I've already asked you about some of the shortcomings in relation to the information that was being presented to the board about risk issues in this period.
Yes.
What changes did NAB introduce to address these issues?
A lot. There was a huge program of work that was implemented. We called it Project Cornerstone, or management called it Project Cornerstone. Ultimately, the quality of the reports coming to the Board Risk Committee contained a lot more detail, considerably more granularity, showing where various parts of the business were operating with respect to risk boundaries, where the gaps were, clearer definition of responsibilities. These, as you would know, the elements of risk that we're talking about here are not the same as elements of risk that we were talking about earlier in respect of ASIC, quite different. But nevertheless, absolutely important to the running of the business and to the oversight of risk provided by the Board Risk Committee and ultimately the Board. A lot of granularity. I think there are well over 100 risk limits that are identified now in the Group Chief Risk Officer's reports every month as a consequence of Project Cornerstone.
Could I tender that document, Commissioner?
Letter from APRA to Henry, APRA Prudential Review, Risk Governance, 28 April 16, NAB 007 002 0008, Exhibit 7.95.
Dr. Henry, did the improvements that you've just spoken of focus largely on financial risks?
Largely, but not entirely. There were non-financial risks in there as well, operational risks.
But was
identified.
enough done to improve oversight of non-financial risks?
Oversight. Certainly the quality of information coming to the Board Risk Committee and to the Board as a result of Project Cornerstone in respect of non-financial risks, it improved. Did it improve sufficiently? It's a good question. We continue to have gaps in our non-financial operational risk performance, so that's a continuing piece of work. We have, as the Commission knows, we took a decision, well, more than 12 months ago, that we needed to spend a lot more money in improving effectively industrialising the strength of our systems so that we could have better reporting of, and not just reporting, so that we could be assured that there was better management of non-financial risks in the business, including data quality. We're spending, we spent an additional $500 million last year, and again we will this year and in the following year, that's directed precisely to those things. So we do have further to go, but this project certainly helped. Project Cornerstone certainly helped in identifying the areas that needed attention.
The second review that APRA completed in that first half of 2016 was a compliance and remuneration review. Now, can I take you to that document? NAB 007 002 0016. Now, in the third and fourth paragraphs of this letter, APRA explained why it was conducting this review. If we could expand those for you, we see that APRA said, over the past few years, APRA has observed a significantly higher number of breaches of prudential standards for NAB,
yes,
relative to peers.
Yes.
NAB internal audit has also identified material concerns with the bank's management of compliance, and a number of compliance controls appear to be ineffective. This impacts the confidence that we can place in NAB's ability to control its risk profile. More to the point, it also impacts the bank's ability to consistently meet APRA's standards. The purpose of APRA's prudential review was therefore to better understand NAB's internal frameworks and assess their effectiveness in incentivising and driving the right risk behaviours within the bank. On compliance, our focus was identifying the root causes of past breaches. On remuneration, the review was an opportunity to assess how effectively risk is factored into remuneration arrangements. which should encourage behaviour that supports and drives a strong risk culture.
Yes.
Now, over the page in its summary of findings at 0017, APRA said under summary of findings, in APRA's view, an effective compliance framework should establish and maintain reliable controls that can detect and prevent breaches. The series of past control failures suggests that NAB is not yet operating with the level of reliability it needs, both to meet its own risk appetite for compliance and to meet APRA's expectations of an advanced bank. And further down, 2 paragraphs down, remuneration has a key role to play in supporting compliance and risk management and in shaping the bank's risk culture. While risk is factored into NAB's remuneration arrangements, it is not clear how effectively it is embedded, and we have identified a number of areas in which NAB's approach should be strengthened. This includes risk-adjusting financial performance measures and ensuring that there is sufficient weight on risk and clarity on accountabilities within scorecard. The structure of remuneration for the Group Chief Risk Officer should also reflect the distinct responsibilities of the role. That was a summary of what APRA found.
Yes.
And if we turn to the report itself, we see that APRA set out its findings about compliance and remuneration separately. At 0019, in relation to compliance, APRA said, in summary, this is under the heading compliance, the findings indicate that compliance controls need to be tightened to meet the standard that APRA would expect of an advanced bank. What was your reaction to receiving these findings from APRA about compliance and NAB's failings to meet the standards that APRA expected of an advanced bank?
Well, it was no surprise. The findings came out of a piece of work that APRA conducted inside NAB and by talking to people inside NAB about the effectiveness of NAB's own controls, so it was no surprise. Concerning, absolutely concerning, but not a surprise, and motivating too, because it certainly motivated a good deal of action, as you're aware, including in putting more emphasis on risk-adjusted financial performance metrics, most notably return on allocated equity in the bank's overall performance, but also in ensuring that all material risk takers in the bank and certainly all the senior executives in the bank had risk objectives firmly in their scorecards or performance plans. We've changed the name of those things recently, but and we did change the structure of the remuneration for the Chief Risk Officer as well. It was motivating, it was helpful. It wasn't surprising, it was concerning.
Can I come to what APRA said about remuneration?
Yeah.
At 0022. In the first paragraph, APRA said that overall there is significant scope for NAB to more effectively factor risk into remuneration arrangements to drive a stronger risk culture and clearer accountabilities and expectations within the bank, and in particular under the heading risk incentives. APRA said, APRA's expectations on remuneration arrangements are set out in CPS 510. This standard states that performance-based components of remuneration must be designed to align remuneration with prudent risk-taking. To achieve this, financial performance metrics should be adequately adjusted for risk, risk management should have sufficient weighting in scorecards, and risk management expectations should be clear and measurable. In APRA's view, NAB's current approach does not yet adequately meet this standard and lags peers in some respects. You accept those findings? Again, unsurprising findings?
Indeed, unsurprising.
And in the next paragraph, effective remuneration arrangements should include adjustments for risk. For NAB senior executives, performance is measured primarily by reference to cash earnings, return on equity and net promoter score, with an overlay for leadership criteria. Long-term incentive plans are based on relative total shareholder return. There is therefore a heavy emphasis on profitability measures in individual performance assessments, and unlike peers, there are no risk-adjusted measures of profitability. You accept that that was an accurate characterisation of your remuneration framework at that time?
Well, yes, I mean, that's what we told APRA, yes, of course.
So APRA's view, in summary, was that NAB's remuneration arrangements weren't operating as they should to support the prudent management of risk at NAB?
That was their view, yeah.
And that NAB's compliance arrangements fell short of the standard that APRA would expect of an advanced bank?
That was their view, certainly.
All right. Now, could I tender that document, Commissioner?
Letter APRA to Henry concerning APRA Prudential Review, Compliance and Remuneration, NAB 007 002 0016, Exhibit 7.96.
Now, returning back to our chronology in relation to advisor service fees, Dr. Henry, I've taken you to these documents in the first half of 2016.
Yes. Yeah.
By the end of NAB's 2016 financial year, as at the end of September 2016, NAB subsidiaries had made a number of breach notifications to ASIC and APRA in relation to both planned service fees and advisor service fees.
Yeah.
And there were further issues in relation to advisor service fees that were under investigation.
Yes.
And NAB was aware that ASIC was investigating the issue of fees for no service across the industry.
That's correct, yeah.
And that it could decide to commence enforcement proceedings.
Yes.
And NAB had also received these prudential review reports from APRA that I just took you to, telling NAB that it needed to do more to reflect risk management considerations in its remuneration framework.
Yes.
And it was against that backdrop that NAB's board came to make decisions about short-term incentive payments and executive remuneration for the 2016 financial year.
Yes.
Now, like the other banks that we've heard evidence from in this round of hearings so far, NAB has this short-term variable remuneration program for its employees.
Yes.
They're eligible to receive bonuses.
Yes.
And that also applies to the senior executives.
Yes.
And each year the Remuneration Committee makes a number of recommendations to the board about those bonuses.
Yes. Typically, well, no, not typically. I think always following a joint meeting of the Risk and Remuneration Committees.
Yes. Now, I want to focus on two of the sorts of recommendations that are made.
In 2016?
Yes.
Yes.
For now. The first is that the Remuneration Committee makes a recommendation about the size of the overall bonus pool.
Yes.
And can you explain in general terms what that involves?
Yes, I can. So it's actually quite a straightforward calculation. It's less straightforward today than it was then, but in 2016 it was relatively straightforward calculation. So in those days we referred to it as a pool. It's, I think, very confusing language, but anyway, the calculation looks at the overall performance of the business in aggregate against various metrics, and those are the ones that you've drawn attention to. So cash earnings, return on equity, and so on. So it compares the outcome with the board-approved target for each of those things at the start of the year. And then it's a simple arithmetic calculation. At least it was back then. It's no longer, but it was back then a simple arithmetic calculation to say, well, Which might say, well, the business as a whole met the financial targets, and therefore the pool forms at 100%, or it might form at 105% or 110%, or it might form at 95%, and so on. And it was a simple arithmetic calculation.
And as part of that process, the Remuneration Committee made a recommendation about whether the size of the pool should be adjusted to take into account risk-related matters. That's right?
So we had quite a discussion.
And I want to come to that, but am I right in terms of the process at the moment that the Remuneration Committee decides whether to recommend that the size of the pool, even if all of those financial metrics have been met,
Yes.
whether the size of the pool should be adjusted to take into account risk matters?
Or other matters, indeed, right? Or other matters. I mean, the board does and did then have absolute discretion to adjust the size of the pool for any reason. But risk would have been back then, and it's, well, I think it's still true today, that would be the principal reason for the
For
adjustment.
adjusting the
Yeah,
size of
yeah,
the pool.
yeah,
Now, so that's the first recommendation. I said that there were two that I was
Yeah,
interested in
yeah,
asking you
yeah,
questions
yeah.
about. The second is recommendations about risk-related adjustments to individual
Yes,
short-term variable remuneration by NAB's executives.
yes,
And the Remuneration Committee makes recommendations about those matters with input from the Risk Committee
yes,
and the Chief Risk Officer.
yes.
Now, could I take you to NAB 005 8682311, which is an agenda for a joint meeting of the Remuneration and Risk Committees on the 5th of October 2016. So we can see from that agenda that there was to be a joint meeting on the 5th of October, and at the meeting of the Remuneration Committee ahead of the joint meeting, do you see that? There was scheduled to be a Remuneration Committee meeting first and then a joint Remuneration and Risk Committee meeting.
Yeah, that's correct.
And at the meeting of the Remuneration Committee, the CEO at item 6 was scheduled to present a report to the committee about the performance outcomes for his direct reports. Now, do you recall that report, Dr. Henry? Do you recall, let me put it this way, that report from the CEO did not suggest any risk-related adjustments to the short-term variable remuneration of the executives?
Yes.
And
Yeah, I do recall.
further down, we can see from the agenda that at the joint meeting of the Remuneration and Risk Committees, the Chief Risk Officer was scheduled to present a paper called FY16 Risk Management Performance. Now, can I take you to that paper, which is at 2406? We might need the full number for that document, NAB 005 868 2406. Thank you. So this is the paper from the Chief Risk Officer relating to FY16 risk management performance. And we see that it provided the Remuneration and Risk Committees with the Chief Risk Officer's assessment of that risk management performance and outcomes for FY16.
Yes. Yes.
The Chief Risk Officer did not suggest any risk-related adjustments to the short-term variable remuneration of NAB's senior executives for this financial year.
That's correct.
We see his recommendation at 2408 under the heading towards the bottom of the page, Group Chief Risk Officer Recommendation. Overall, whilst there have been a number of events and breaches identified during the year, they have been subject to appropriate and timely reporting, remediation and consequence management. On balance, given the current and forward-looking risk profile relative to overall risk appetite, Risk's recommendation is that there is no discretionary risk-related adjustment to the group's pool for FY16.
That's correct.
Do you have any observations to make about that recommendation, Dr. Henry?
Well, as you know, we had trouble with it. The committee had trouble with it, the board had trouble with it.
Well, I want to come to what the committee and the board did in response to this recommendation.
Well, that's my reaction. And it remains my reaction.
All right. Before we move to that, this recommendation didn't deal with individual risk-related outcomes. This was about the pool. That's right?
Yes.
So the next paper was on FY16 business outcomes for short-term incentives. That's at 2414. And this was a paper that was presented by the CFO with support from the CEO. Do you recall that? If it assists, I'll bring up 2416 next to this page so you can see.
No, I recall it, yeah.
You recall that?
Yep.
And under the heading back on 2414, which we have on the screen at the moment, FY16 group STI pool, do you see that? A bit under halfway down the page?
Yes, of course, yeah.
The CFO and the CEO recommended that 100% of the short-term bonus pool be funded.
Yes, as I said, it's a purely arithmetic indeed.
Yes.
Calculation.
Well, we see what it was based on underneath the table. The recommendation of 100% is based on achieving cash earnings only slightly below plan, 99.4%, despite net headwinds of 177 million.
Yeah.
The result is also 99 million above consensus and is likely to be viewed externally as modest outperformance. So no reference to risk-related issues here.
That's correct.
All right. Now, I want to come to the minutes for the joint meeting that considered these documents, but I think because of the way the documents I've just taken you to have been presented, I need to tender them separately. The agenda is NAB 005-868-2311. I'm sorry, could I tender that
Yes.
document, Commissioner?
That document is Exhibit 7.97.
And I should tender separately the FY16 Risk Management Performance Report, NAB 005-868-2406,
Exhibit 7.98.
and the document which is on the screen at the moment, which is the FY16 Business Outcomes for Short-Term Incentives paper, NAB 005-868-2414.
Exhibit 7.99.
Now, could we turn to the minutes for the joint meeting, Dr Henry, on the 5th of October, NAB 09200011657. So we can see that you're listed as an attendee at this meeting.
Yes.
And we can also see that before the meeting started, you and the other directors, apart from Mr Thorburn, met in the absence of management and discussed the agenda items.
Yes.
And after that, management joined the meeting.
Yes.
Now, what can you tell us about the discussion of the directors at the start of this meeting before management joined?
Oh, it's reflected in the minutes, I'm pretty sure. The committee was unhappy.
What was the committee unhappy with?
There have been no risk adjustments, risk-based adjustments proposed.
And that was the extent of the discussion?
Oh, that would have been, that was the principal, that was the principal issue, that management had not proposed any risk-based adjustments, that there continued to be, as evidenced through the APRA reviews and other matters of which we were aware, there continued to be control failings in the business that were concerning. We were aware that a lot of people were working very hard to improve controls. there had been full and open cooperation with APRA and its various reviews, which of course is reflected in the APRA letters. People were really trying to fix things, but nevertheless the performance was not, in our view, where it needed to be. And so the question for us was, what is the best way to for the board to send a signal to the business that this is just not good enough?
And when you say the committee was unhappy with that, are you referring to the Remuneration Committee, the Risk Committee, or both?
I'd say both, yes.
Yes.
Yeah.
All right. Now, could we look at the second page, 1658? We see there that the second item that was discussed at the meeting was the FY16 Risk Management Performance Paper that I took you to earlier. Do you see that towards the bottom of the page?
Yes.
And
Yes.
under that heading, we see that one of the directors informed management that based on the conversation before management joined the meeting, the committees were contemplating whether to recommend to the board that a discount be applied to the group short-term bonus pool in relation to risk management performance.
Yep.
And over the page at 1659, we see at the top paragraph that the committees challenged Mr Gall on his recommendation to the committees that no discount be applied in light of the risk management issues set out in his memorandum.
Yes.
And we see that in response, Mr Gall and Mr Thorburn described the progress that had been made during FY16 to reduce risk in the organisation and provided some further context.
Yes.
So Mr Gall and Mr Thorburn defended their recommendations and explained why the committees and the board could, in their words, take comfort in improvements in risk management.
Yes, I remember that, and the board was not satisfied, as you know.
Well, underneath that, we see that the committees noted Mr Gall's recommendation. Do you see a couple of paragraphs down? Noted Mr Gall's recommendations and responses and confirmed that they would be factored in to the committee's further deliberations.
Yes.
Now, those further deliberations are recorded over the page at 1660 under the heading Recommendation to Board on FY16 Business Outcomes for Short-Term Incentives. We can see there that the meeting chairman invited directors to share their views, and those views are summarised below. And the first of the directors' perspectives was that there had been a significant amount of change in relation to risk-related matters throughout the year. Is that
That's
right?
correct. That's Project Cornerstone, to which I referred earlier.
And the second point was that reducing the short-term bonus pool would have an impact on staff morale,
That's true.
and that the capacity of most employees to influence risk management performance in the areas of concern to the directors was limited.
Yes.
I want to come back to that.
Yes, I'm sure you do, yes.
The third point, Dr. Henry, was that the tone from the top should be very clear regarding the board's expectations for a strong focus on risk the following year.
That's right.
And the fourth point was that incentives should be aligned with shareholder outcomes.
Yes. Yes. And I'm not sure whether you're going to go to the two options that were considered
I
by...
am.
You are,
I
yeah,
am.
okay, all right.
Yes. So I want to come back to each of these 4 points, but first we see further down that the committees asked Mr Thorburn to consider the two options that you've just referred to and make
there we are,
a
yes.
final formal recommendation. And the two options were that the pool was to be set at 100% with a strong tone from the top message to be conveyed by senior management regarding the board's requirement that there be further improvements in risk management. And the second option was that the pool be set at 95%, with the 5% reduction attributed to sending a message about the board's concerns regarding further improvements needed in risk management. They were the two options
That's correct.
that you asked Mr Thorburn to consider.
Yes.
And the committees agreed that they would recommend to the board that authority be delegated to you and to the chair of the Remuneration Committee, Mr Gilbert,
Yes.
to make a decision between those two options.
Yes, that's correct.
And that happened. The board accepted that recommendation and that authority was delegated to the two of you.
That's correct.
Now, I want to come to the decision that you and Mr Gilbert made, but can we first just go back to the 4 directors' perspectives on this page? Now, that first point there reflected the discussion that the committees had had with Mr Gall and Mr Thorburn. Is that correct?
Well, it did, but it also reflected the committee's knowledge of all the work that had occurred over the preceding 12 months, obviously.
Well, the committees challenged Mr Gall and Mr Thorburn on the poor risk outcomes for this financial year. Is that right?
That's true, yes.
And in response, Mr Thorburn and Mr Gall emphasised changes that had been made to the risk management framework in that year.
I see the distinction you're drawing. That is true, but of course the committee was aware that there had been more than framework changes.
Well, the changes to the framework hadn't been tested yet, had they?
No, they had not.
No one knew whether they would improve the outcomes.
Well, APRA thought they would, and we thought they would, and I think they have.
But what you did know, what the committees knew, Dr Henry, was that in the course of the year there had been a number of very poor outcomes, very significant breaches of NAB's legal obligations.
That's right.
And do you think the committees were right to accept management's assurances that no consequences were necessary because changes were being made?
Yes.
Do you think you did enough to challenge those assurances?
Yes. I think we did. I do.
All right. Well, we'll come to the decision, but sticking with the second point here now, that related to the impact on staff motivation and the capacity of ordinary staff to influence risk outcomes. Does that reflect your views, Dr Henry, that ordinary staff have limited influence over risk outcomes?
No. Not in retrospect, no.
It did at that
No.
time?
It's plausible, but I don't think the evidence. I don't think the evidence substantiates the point.
Do you accept that even relatively junior staff in your organisation should have enough knowledge to speak up about risk issues?
Yes, I do.
And therefore influence risk outcomes?
Yes, I do, and more to the point, as you know, in some cases, quite junior staff have been dismissed for inappropriate risk behaviour.
The fourth point, Dr Henry, was that incentives should be aligned with shareholder outcomes. What did the committee mean by this?
This is 2016, right?
Yes?
I'm struggling to recall, honestly, but I suspect it was a reference to long-term shareholder outcomes.
Incentives should be aligned with long-term shareholder outcomes.
I
What does
think
that mean?
So that is that long-term shareholder outcomes are likely to be affected by risk posture and risk performance.
And do you think this is an appropriate approach to remuneration?
Well, as you know, we've changed our whole model of remuneration in several important respects. It doesn't, well, it bears some relationship to the model that we were implementing in 2016, but in very important respects is very, very different.
Well, in the speech that you gave in May that I took you to yesterday, you said we would have to admit that even several years of strong performance for shareholders does not necessarily mean that customers are being treated fairly, depositors protected, and banks made safe from the risk of failure.
Yeah, I think they're very wise words.
What about the words on the page, Dr Henry? What about incentives should be aligned with shareholder outcomes?
So, I don't know whether now's the appropriate time to have this discussion, but in the first round of hearings, Commissioner, you put a question to a witness that was a very important question. You asked the witness to consider a continuum separating shareholders and customers. And your question was whether it was the case that businesses in financial services, including banks, were not locating themselves too close to the shareholder at the expense of the customer. In the ensuing period, there's been a lot of discussion about that matter in Australia, and it's a rather important discussion. It goes to the behaviour of businesses, obviously. It goes to what it is that motivates businesses. It goes to the things for which boards hold themselves accountable in the conduct of the business. It actually goes to, there's a much deeper level of importance to this question because it goes to the state of capitalism. The capitalist model is that businesses have no responsibility other than to maximise profits for shareholders. A lot of people who have participated in this debate over the past 12 months have said that's all that you should hold boards accountable for, is that they are focused on the maximisation of profits for shareholders. Now, of course, some people will say, but that doesn't mean that you can mistreat customers because doing so might be in the interest of the short-term interests of shareholders, but not in the long-term interests of shareholders. But even that approach sees customers as instruments, in an instrumental fashion, that the customers are seen as the means by which shareholder profits are secured, rather than the customer being the focus, what the business is actually all about. And in my testimony to you yesterday, and in things that the Chief Executive said in this room yesterday, you would have gathered that this is something that within NAB we have, over the last few years, thought very deeply about, whether we should see our customers in purely instrumental terms as the means to an end rather than the end in itself. Views on this differ. It's open, obviously, to the Commission to enter into this rather important debate. Could play a valuable role by doing so, but anyway, for what it's worth, NAB's view clearly today is that incentives should be aligned with customer outcomes, to be clear, customer outcomes. That instead of positioning the business in this way, that the purpose of the business should be to maximise shareholder returns subject to customer tolerance and subject to regulatory tolerance, that rather the purpose of the business should be about maximising the outcomes for customers subject to financial viability. And it is a rather profound distinction.
So there's been a shift from the sentiment that we see expressed in this document.
I would say monumental shift, yes.
Thank you. I'll tender the minutes of this meeting, Commissioner. It's the meeting of the joint meeting of the Remuneration and Risk Committee on the 5th of October 2016.
And the doc ID, Ms Orr?
NAB 09200011657.
Becomes Exhibit 7.100.
Now, I said I wanted to come to the decision that you and Mr Gilbert made about whether to go with option A or option B as presented in this paper.
Yep.
we see that you made that decision on the 14th of October 2016. Could I take you to NAB 005-868-2465? We see from this document that you and Mr Gilbert had a meeting, which was also attended by the CEO, the CRO and the group company secretary.
Yes.
And you and Mr Gilbert required Mr Thorburn to make a recommendation about which of the two options should be adopted.
Yes.
And Mr Thorburn recommended option A, that there be no reduction to the short-term bonus pool.
Well, that's part of his recommendation. Yeah.
Well, he recommended option A, not option B, didn't he?
That's correct. But option A has two parts to it, obviously. Yeah, that's all.
I'm sorry, you're referring to that there be no reduction to the bonus pool, but an important tone from the top message be conveyed by senior management regarding the board's desire to see further improvements in risk management. That's the
right.
second component of
That's
option
correct.
A.
Yeah, yeah.
And you and Mr Gilbert accepted that recommendation.
We did.
For the reasons outlined by Mr Thorburn in the email that's attached to these minutes. That email is at 2466.
Oh, yes, I remember it. Yes.
And it was for those reasons.
Yes.
So if we turn to that email, we see that Mr Thorburn set out a series of points in support of his recommendation that there be no reduction in the bonus pool.
Yes.
And the first of those emphasised again that the business had met its financial targets.
Well, clearly that wasn't going to persuade us.
But that's the first
That was the
point.
very issue that that was the very matter that we took issue with.
But it was also the first point that Mr Thorburn made to you in this
Oh,
email.
I see your point. Yes, indeed, yes.
And the
And
second,
we were not happy.
well, the second point that he made was that there had been a major reduction to the pool in 2014. Now, was that because of the mis-selling of payment protection insurance by your businesses in the UK?
Principally, yes. It could have been other matters in the UK. I just can't recall, but it certainly was UK related, yeah.
And Mr Thorburn said that the reason incentives were reduced in that year was not because of the poor management of risk, but because the remediation of those issues meant that cash earnings hadn't been achieved. Do you see that?
Sorry, could you
We'll
take
just
me
have
back
that
to
back up on the
Yeah.
screen for you again. He says that the reasons the incentives were reduced in 2014 was not because of poor management of risk.
Does he say that?
Well, what he says it was due to cash earnings not being achieved.
Yeah, but the reason cash earnings were not being achieved was because of very poor risk management in UK
But that is
previously.
that is
But we were aware of this,
I
and
know,
it was
but-
conduct charges that were applied to Clydesdale and Yorkshire Bank in that period as a consequence of poor risk
I'm
management.
talking about what Mr Thorburn is putting to you as the reasons that support his recommendation. He says to you there was a big reduction in 2014
Yes, yes.
because we didn't achieve our cash earnings.
Yes, but what I'm saying to you is the reason why we didn't achieve the cash earnings is because of...
I understand that. I'm asking you to reflect on this communication from Mr Thorburn. Did this reflect the right approach by Mr Thorburn to these issues, to be focusing on the impact on cash earnings in 2014 rather than the risk problems that sat behind that?
That's not why... I don't believe that's why Mr Thorburn authored this dot point. I think he was saying something quite different.
You think he was saying something different to due to cash earnings not being achieved?
No, not that. I think what he was saying was, if there is to be a reduction in the pool, it should be clear and seen as fair. What you're referring to is the stuff in parentheses, which is the less important part of that dot point. The point here is that, and we were all aware of this, that the poor performance in the UK, one, was due to very poor risk performance in the UK part of the business, and two, was entirely outside of the control of about 30,000 people working in NAB because they had absolutely nothing to do with the UK.
And that's the
And that
fairness,
was the important point here.
that's the fairness point that you
Correct.
understood Mr Thorburn to be referring to
That
here.
is what I understand by this point, yeah.
And underneath that, Mr Thorburn referred to some more specific matters. He mentioned that NAB's red rating for compliance risk, he mentioned that, and some of the matters that contributed to it. Do you see that?
Yes, I do, yep.
And he said that 3 of those contributing matters were explainable. Do you see that reference in the
Yeah, I'm sorry, I
fourth
was just a bit slow getting to it. I do see it, yes.
But he didn't mention the issues relating to advisor service fees and plan service fees.
That's true.
He didn't mention the bank bill swap rate matter.
I don't think we need to go there.
Well, he didn't mention it, is my question, Dr. Henry.
No, he didn't mention it.
And he didn't mention your foreign exchange breaches.
You mean the matters that were subject of the enforceable undertaking
Yes, I
with
do.
ASIC? That's correct, yes. Yeah.
So he didn't mention any of those matters, advisor service fees, plan service fees, the bank bill swap rate, the foreign exchange breaches. Did you have enough information from Mr Thorburn about those issues and the consequences that those issues might have to make your decision?
Yes.
Did it concern you that Mr Thorburn's email to you did not mention any of those matters?
No.
Well, Dr Henry, given the very significant compliance breaches and other breaches in that financial year, do you think that you made the right decision in deciding that there should be no risk-related reduction to the bonus pool?
Yes, bearing in mind that there was a requirement that the Chief Executive communicate to the organisation, right through the organisation, that the board expected to see a substantial uplift in performance.
You said earlier, Dr Henry, that you weren't sure what the board could have done differently or when it could have done something differently. I want to suggest to you squarely that this was a point at which the board could have conducted itself differently. It could have sent a strong message by reducing the pool in response to these very significant compliance issues.
Of course we could have, and we decided not to. For very good reasons. And I'm still happy with those reasons.
You said yesterday, Dr Henry, when I asked you about the right culture in a financial services entity, that it was a culture that is all about the customer, which puts the customer front and centre and which is intolerant of practices which are not in the customer interest.
Yes.
What better way to demonstrate intolerance of practices which are not in the customer's interest than to reduce the bonus pool as a result of risk?
Well, we could have fired everybody, I suppose.
Well, that's not what I asked you. I'm asking you about a decision that
You
was
asked
before
me.
you
You
as
asked
the
me
board.
what better way to demonstrate that we have no tolerance for those sorts of compliance breaches. You could fire people, and we do that too.
Are you seeking to defend the decision that you made by reference to the fact that you could have but didn't fire people?
But we did fire some people, yes,
Right.
but at more junior levels, as you know.
Yes. So you maintain that this was the correct decision, Dr
I do,
Henry?
absolutely, I do. Yes.
I see. I tender this document, Commissioner.
Minutes of meeting of board delegates 14 October 16 and attached email, exhibit 7.101.
Now, at NAB's annual general meeting that year, Dr Henry, you committed to a review of NAB's executive remuneration framework and practices.
Yes.
And I want to come back to the results of that review, but again, I want to carry on with the sequence of events. We are in October 2016 at this point. Over the following year, progress at NAB in dealing with the advisor service fees issue was very slow. Do you agree?
Yes, I do.
NAB made proposals to ASIC about the approach it would take to investigating and remediating the advisor service fee issues,
That's correct.
and ASIC rejected those proposals because it did not believe that they were sufficiently customer-centric.
Yes.
And over the course of that year, your rating for compliance risk remained red.
Yes, that's correct.
And in part, that was because of the lack of progress on the advisor service fees issue.
Yes.
And then in October 2017, ASIC provided NAB with a document titled Outline of Suspected Offending by the NAB Group. Do you recall that?
Sorry, could I?
Yes, would you like
See
to
that,
see
please?
that?
Yeah, yeah.
ASIC 0036 0002 2531. Have you seen this
Oh,
document
yes.
before?
Yes, I do remember this, yes.
This is Exhibit 5.68, Commissioner. Was this document drawn to your attention in October 2017 when it was received?
I honestly can't recall. I would expect so, but I honestly can't recall.
Should it have been drawn to your attention, Dr. Henry?
Yes, I do think so, yeah.
It outlined alleged contraventions by NAB of the Corporations Act and the ASIC Act, which ASIC described in the document as serious and systemic.
Yes.
Then by the beginning of this year, 2018, NAB and ASIC still hadn't agreed on the approach that NAB would take to investigating and remediating the advisor service fees issues.
That's correct.
And in April this year, NAB made another proposal to ASIC through correspondence sent by Ms Cook, NAB's Chief Legal Counsel, about its approach.
Yes, I'm familiar with that, yes.
And Mr Hodge asked Mr Thorburn a number of questions about that proposal. The proposal emphasised that NAB had shifted to a fee-for-no-service model before the introduction of the FOFA reforms
Yes,
and relied on that as a basis for NAB to resist reviewing whether customers who paid ongoing fees before the introduction of those reforms actually received the services that they had paid for.
yeah, I'm familiar with that.
And it also claimed that it would be unjust for NAB to have to refund customers in circumstances where NAB couldn't track down records of whether those customers had received the services that they'd paid for. Do you
Yes.
recall that?
I recall it.
Now, I want to take you to ASIC's response to that proposal. Have you seen that document before, Dr. Henry?
I certainly have.
When did you first see that document?
Oh, I can't remember the exact time, but it wouldn't have been much after it was received.
All right. That is ASIC 0036 0002 3180. This is Exhibit 5.77. So it's a letter from Tim Mullally and Joanna Bird at ASIC to Sharon Cook and Nicole Smith. You see that?
Yes.
And we see that the authors said, under the heading Advisor Service Fees, your letter of 13 April 2018 fails to engage at all with the serious concerns outlined by ASIC in its position paper, dated the 27th of October 2017. That's a reference to the outline of suspected offending.
Yes.
And it goes on, the proposed resolution set out in your letter fails to adequately reflect any insight into the seriousness of the suspected misconduct which took place over an extended period of time and affects a substantial number of customers.
Yes.
And in the next paragraph, it says, moreover, it now appears the number of NAB Group customers who may be affected by the fees for no service issue is likely substantially greater than outlined in ASIC's position paper, particularly when one considers the $28 million of advisor fees for which the NAB Group purportedly has no corresponding digital evidence of the delivery of any service. You see that?
Yes, I can read
And
it. Yeah.
ASIC went on to say, in the circumstances, ASIC rejects the proposal outlined in your letter and will continue with its investigation. In this regard, we understand that the investigation team has separately conveyed its concerns with the NAB Group's responsiveness to ASIC's most recent compulsory notices. In the interests of finalising the investigation as soon as possible, ASIC requires NAB to fully and transparently cooperate with it and comply with the deadlines in the notices.
Yes.
And then the letter dealt with the review proposal. ASIC did not agree with NAB's further review proposal.
Mm-hmm.
And in the third dot point, we don't seem to have the dots on the screen, but can you see towards the bottom of the page for a significant period of time?
Oh, yes.
For a significant period of time, NAB has suggested various remediation methodologies that ASIC has consistently rejected as unacceptable, and the latest proposal retreats even further from what we would expect NAB to consider to be in the interests of its customers. Accordingly, ASIC does not see benefit in continuing to discuss the further review methodology with NAB. Now, you say you were made aware of this letter shortly after it was received.
I believe so.
And what was your reaction when you read this letter, Dr. Henry?
I was appalled.
What were you appalled by?
I was appalled that the issues had already taken so long to achieve effective customer remediation. That is, a level of customer remediation that both we and ASIC were, and when I say we, I'm talking about the people negotiating with ASIC, that we and ASIC were both comfortable with, and that it appeared that we had taken a U-turn.
By retreating. Is that what you mean by the U-turn?
Yeah, that is what I mean, yeah. Yeah.
Can I take you to the minutes of the board meeting that followed the receipt of this letter
Yeah.
on the 31st of May 2018? They are NAB 006 041 0138. You recall this meeting, Dr. Henry?
Yes, I do.
And we see from these minutes, if we bring up 0140 and 0141, we see that Ms Cook provided an update at this board meeting about the advisor service fees issues.
Yes.
The board had reviewed a memorandum that provided that update. Ms Cook updated the board on discussions with ASIC, including ASIC's letter that I just took you to.
Yes.
And the minutes record that the board reiterated its frustration over the length of time taken to agree a methodology with respect to advisor service fees and to remediate customers. Previously expressed concerns were reiterated by the board over adherence to a position based on early adoption of the fee-for-service model, given the now known flaws in implementation. The board expressed further concern at the tone and content of ASIC's letter.
Yep.
Now, Dr. Henry, by this time, NAB had been discussing this issue with ASIC for almost 3 years.
Yeah. Yeah. Yeah.
And in that time, NAB had repeatedly adopted positions that were not acceptable to ASIC. You disagree
As you know,
with that?
well, no, I'm not. No, I think that is true. But as you know, one of the issues, and it has been presented in evidence in this commission, is that there may have been different views within ASIC being communicated, different views in NAB. So, and I don't have line of sight of that.
No. But do you accept that NAB had repeatedly adopted positions that were unacceptable to ASIC?
Yes, but not all the time and not on every occasion and not in every conversation.
Do you accept?
There were times when it's clear, or at least we thought, that we and ASIC were moving in the same direction. So I don't think it's correct to say that at all times we were disagreeing with ASIC. That's not correct. Neither is it correct, I think, anyway, I'm led to believe it's not correct to say that everybody in ASIC disagreed with NAB's approach at all times. Nevertheless, 3 years, it's absurd.
Well, ASIC had repeatedly warned NAB that the positions it was adopting were not in the interests of its customers. Do you agree with that?
I don't know. I mean, ASIC says that's the case. Obviously, I didn't have any of these conversations with anybody in ASIC at any time.
No, but have you received reports about those matters?
Addressing that particular point, well, I've seen the ASIC letter that we've all seen, which says that. I accept that it's true, at least in direction. Yep. And I do accept that that's ASIC's attitude to the way in which NAB approached this matter with ASIC.
Do you accept that NAB's engagement with ASIC over that 3-year period had the result of harming NAB's relationship with the regulator?
Yes, I do.
And do you accept that it prevented NAB from getting on with the job of remediating its customers?
Yes, I do.
And it caused NAB to remain outside its risk appetite for compliance risk?
Oh, because we didn't have a customer remediate. Well, yes.
Dr. Henry, why didn't you say to management at this point, enough is enough, this is harming our customers, it's harming our reputation with ASIC, get it fixed and get it fixed now?
So when did we say that? Because we did say that at some point. You're saying it wasn't May.
No, we see from this document that you reiterated frustration. I want to understand why you didn't say at this point, having seen that communication
Yeah.
for ASIC, enough is enough, fix it now.
Maybe we should have used those words. Maybe we did. It's not reflected in the minutes.
No, it's not reflected in the minutes.
Reiterated its frustration.
Yes.
We were pretty cross.
Did you say to management in this meeting, this has got to stop, get this fixed and get it fixed now?
I don't think anybody in management would have been in any state of confusion about the board's attitude to this.
About the board's frustration?
Yes.
It was a simple thing to say, was it not, Dr. Henry?
Well, we
This
may have
has
said
got
it.
to stop.
I can't recall the exact words that we used at the time. It was pretty strong. It was pretty strong.
What do you recall about the words that you used, Dr. Henry?
I don't recall the words that I used.
Was it acceptable, in your view, Dr. Henry, for NAB to behave in a way that provoked the kind of response from ASIC that we saw in that letter?
I've already answered that question, and the answer is no. Yeah, no.
It wasn't until September this year, nearly 4 months later, that NAB agreed a methodology with ASIC in relation just to the review of its employed financial advisors. Is that right?
Yes.
Even at that time, NAB was still some way from agreeing a methodology in relation to the review of its aligned licensees.
Yes.
Did NAB's management do enough in response to ASIC's letter to get this issue resolved?
I think so. Yeah, I think so.
Why do you say that, Dr. Henry?
Well, this marked a turning point, right? Between May, or the end of May, so June and September, in that 3-month period, management worked pretty quickly to the resolution of the major issue outstanding between us and ASIC,
What do you describe as the major issue?
the one you just described.
Are you referring to the review of employed financial advisors or the
Yes.
review of your aligned licensees?
No, the employed, yeah.
I see. Dr. Henry, why did it take a letter from ASIC of that nature for you to reach the turning point as
Yeah,
you've
it's a good
described
question.
it?
Good question. It goes back to one of your early questions this morning, which I've already answered. I just don't think we should be in this world. We should not be behaving this way.
Mm-hmm.
It should not require letters of that sort from ASIC. It should be capable of us as a business behaving in the way the Commissioner put it.
So
We
why,
should be capable of deciding for ourselves how we remediate our customers.
why didn't the board step in earlier to ensure that that was done?
Yeah, I've already answered that question. And I don't know the answer to that question. You know, at some point, obviously, we should have. Maybe 2015, maybe 2016, maybe 2017. Certainly by this year, 2018, certainly at this point. Okay, did I use the words enough is enough? Well, I don't know. I may have. I was certainly pretty upset. And as were the other directors on the board, pretty upset. We wanted this fixed. We were fed up, both with the damage that had been done to the relationship with the regulator, and of course we had, and a new chair had come into ASIC who the chief executive had met with. He'd reported to the board that the new chairman, with a fresh pair of eyes on this matter, was astounded, and that certainly had some impact on us as well. But more importantly, we were upset that customer remediation had been deferred for as long as it had been deferred. It was inconsistent, quite inconsistent with the discussions that we've been having with management about the purpose of the organisation, the vision of the organisation, the values of the organisation, appropriate behaviours in the organisation. Of course we were upset.
Do you accept that the board should have stepped in earlier?
I wish we had. Let me put it that way. I wish we had. I still don't know.
I'd like you to answer my question, Dr. Henry. Do you accept that the board should have stepped in earlier?
I've answered the question, how I can answer the question.
I'm sorry, is it a yes or a no, Dr. Henry?
I've answered the question the way I choose to answer the question.
Well, I would like you to answer my question. Do you accept that the board should have stepped in earlier?
I wish we had.
I'm going to take that as a yes, Dr. Henry.
Well, you take that as a yes. All right.
Now, I'll tender that document, Commissioner.
Minutes of NAB Board Meeting 31 May 18, NAB 00604101138, Exhibit 7.102.
Now, I want to ask you, Dr. Henry, about the remuneration consequences for some of the executives who were involved in the handling of this matter.
Yes.
Could I ask you to look at NAB 00609400001, which is an agenda for a joint meeting of the Remuneration and Risk Committees on the 2nd of October 2018. So as in previous years, there was a joint meeting to consider risk-related adjustments to individual bonuses and the size of the overall bonus pool.
Yes. Yes.
And if we turn to again, because the way these documents are presented, could I tender the agenda separately, Commissioner?
The agenda of Remuneration and Risk Committee meeting 2 October 18, NAB 006094001, Exhibit 7.103.
And I want to take you to one of the papers presented which dealt with risk management performance. That's 00609400015. Now, do you agree that this paper was much more detailed than similar papers presented in previous years?
Yes.
It included, among other things, an accountability review for
Yes.
significant risk matters.
Yes.
And if we turn to 0020, we see the accountability review for the advisor service fees matter. I'm sorry, we might need to see the earlier page as well, 0019 and 0020. Do you see that?
Yes.
And at the bottom of that first page, we see that the document records that while individuals have had differing contributions to the lack of progress of advisor service fees and plan service fees during FY18, given the duration, scale and severity of the customer and reputational impacts, it is appropriate to apply consequences across all parties who collectively had accountability for resolution of these issues. And
Yes.
over the page, the accountability review included timelines of key events for significant risk matters. I'm sorry,
is that
we
the
might
next
need to
page?
turn further in to see that, to 0029. We see the timeline of key events for the planned service fees, advisor service fees and foreign exchange enforceable undertaking matters on this page. And at 0033, we see a breakdown of recommendations for risk-related adjustments for each executive.
Yes.
And if we turn within that part of the document to 0037, we see the breakdown of recommendations for the risk-related adjustments for the current executive leadership team and some past executive leadership team members.
Yes.
Now, firstly, do you agree that this represented a significant improvement in the amount and quality of the information available to the board and its committees about risk-related matters?
Yes, I do.
And what prompted that change, Dr. Henry?
I think there were a couple of things. Firstly, in your chronology, you haven't taken us to the 2017 outcomes. That was quite a willing conversation as well. And there were consequences applied in 2017, both to the overall group multiple, that is the STI multiple, and also to individuals.
Well, the bonus pool was funded at 90%
That's correct.
in 2017
That's
rather
correct.
than 100%.
That's correct.
And the board reduced Mr Haggar's individual variable remuneration by 5 percentage points.
On that occasion, that was not in respect of ASF, PSF, by the way.
That was
No.
related to ongoing risk-related issues in the wealth business, including the beneficiary nomination
Beneficiary
form
nominations, that's
issues.
right. And so that was important background for us as we went through 2018. But of course, the other thing that occurred was the introduction of the banking executive accountability regime, which I must say we have found really helpful in identifying accountabilities clearly and I think what you see here is a reflection of both of those things.
I see.
Yeah.
Now, we see that 2 members of the executive leadership team are identified on this page as being accountable for the advisor service fees and plan service fees issues, and they are Andrew Haggar and Sharon Cook.
Yes.
And we can see that the Chief Risk Officer recommended consequence management for both of them.
Yes.
Mr Haggar received a risk rating of not achieved
Yes.
and Ms Cook received a risk rating of achieved.
Yes.
Was that an appropriate risk rating for Ms Cook?
Yes.
Do you
Yes. So I don't know whether this is in the papers or not, but so we had introduced a new or developed a new remuneration model for the executive leaders of the organisation, and our initial intention was to apply that new model for the first time to the 2018-2019 financial year. But we decided that we would instead apply the new remuneration model retrospectively to the executive leadership team for the 2017-2018 financial year. And in the course of the application of the new framework, we came to the view that we needed, going forward, to find an intermediate step between met and not met with respect to risk. That the effectively 0-1 or black-white assessment of met or not met with respect to risk wasn't sufficiently informative for the board. And so, and I'm not saying this is the case with respect to Ms Cook, but there certainly were people that we looked at where, frankly, we would have preferred to have given a partially achieved with respect to risk. Going forward, 2019, that's probably what we'll do. We haven't settled on it yet.
So do you say you didn't give the partially achieved ratings in this year because that wasn't part of the system then?
That's correct.
Your system didn't allow for a partially achieved rating?
That's correct. But nevertheless, of course, because the board has absolute discretion to vary amounts for any reason, even though we might, under the scheme, be required or feel obliged to give an achieved rating, we could nevertheless exercise discretion to provide an appropriate outcome in all of the circumstances. And that's what we did.
So you agree with the achieved risk rating that was given to Ms Cook?
Yes, I do. And I've explained the reasons why.
Well, I just want to ask you a little further about that,
Yes.
Dr Henry. Do
Yes.
you think the way that Ms Cook handled NAB's interactions with ASIC, in particular prompting the letter from ASIC that I took you to earlier, represented appropriate management of risk-related matters?
Yes, I do, in the circumstances. Yes, I do.
What are the circumstances that rendered that appropriate, Dr Henry?
We've been through them.
No, I'm sorry, I don't think we have.
Oh, you don't? No.
No.
Okay. No, you wouldn't. All right. Okay. So Ms Cook she had a shared responsibility for these matters. She was not driving the NAB's position with respect to these matters.
But Ms Cook signed off on the letter that yielded the response from ASIC that I took you to earlier.
Yes.
Was that an appropriate management of risk-related matters by Ms Cook?
Yes.
To send a letter of that nature?
Yes.
What was appropriate about it, Dr Henry?
It represented NAB's position, which she communicated to ASIC.
It represented a deeply flawed position, didn't
Well, I
it?
agree with that. We've already been through that, as I said.
Yes.
It was a deeply flawed position. It was nevertheless NAB's position, which Ms Cook was communicating to ASIC.
Mm-hmm. So it's not her fault because she was just communicating that position?
Yeah, that's probably, that is one way of describing it.
Well, is that how you see it, Dr Henry?
Well, she had some executive accountability for this matter, as this table makes clear. And the board's judgment on the appropriate consequence was reflected not in the risk rating for the reasons that I've already explained, but rather in the discretion that the board exercised.
And
And I think that was the appropriate way to do it.
I see. Another paper that was presented at the joint meeting was the paper on the short-term bonus pool. I'll take you to that, but could I tender this paper first, dealing with risk management performance for FY18, NAB 00609400015.
It becomes, I think, Exhibit 7.104.
And if we turn to NAB 00609400041, we see the paper that was presented to the committees on the short-term bonus pool. And we see from this paper in the middle of the page that after adjusting for a potential conduct provision of $300 million, based on financial measures, the bonus pool would have been funded at just under 85%.
You can say after adjusting for the
Well, I'm
conduct charge, you can say after adjusting for a large number of things,
I'm
of course.
quoting from the document, Dr. Henry. I'm
Yes,
not
of
trying
course.
to be difficult. The group STI outcome reduces to 84.7% after adjusting for a potential conduct provision of $300 million.
Yeah, but that's not, as you know, that's not the principal reason why that number is so far away from 100%.
What is the principal reason, Dr. Henry?
The principal reason is performance with respect to the Net Promoter Score, which we discussed yesterday. That explains 12.5 percentage points of it.
Now, if we bring up the next page at the same time, 0042, we see that management presented two options for the size of the bonus pool. The first was not to make any risk-related adjustment and leave the bonus pool at 85%. And the second was to have different results for the executive leadership team and the rest of the bank, with a small downward adjustment of 5 percentage points for the executive leadership team and an upward adjustment of 5 percentage points for everyone else.
Yes, that was one option that was considered put before the board.
Well,
yeah.
they were the two options presented by management for the size of the bonus pool, weren't they?
At that time.
Management said that there was nothing that precluded the Remuneration Committee from recommending that 100% of the deferred awards should vest.
That's correct.
I'll tender that document.
That's my memory of it. Yeah, I think that's true. Yeah. Mm.
Memorandum FY18 Group Bonus Pool NAB 00609400041, Exhibit 7.105.
Can I take you to the minutes of the board meeting on the 2nd of October this year, NAB 007074001. The board met later on the same day as the joint meeting of the Risk and Remuneration Committees, and it considered the reports I've just taken you to.
Yes.
And if we turn to 0007 and 0008, we can see the board's consideration of the first of those reports in relation to risk management performance. Just wait till we have the other page on the screen. And if we go about halfway down the page on the right-hand side of the screen, we see the board discussed the targeted approach to risk management performance and consequence, observing that accountabilities needed to be delivered or consequences would rightly apply. The board challenged the sufficiency of certain proposed consequences and recommended management reassess the proposed reductions.
Yeah.
The board recognised that the targeted approach to risk management performance and consequences may inhibit employees from proactively stepping into risk issues and taking accountability for them, particularly when considering whether to accept a new role in an area the subject of significant remediation, or when requested to inherit a risk or remediation issue from another division. The downside risks of stepping into risk matters were known and would be amplified by the targeted approach to consequence management. the board encouraged management to celebrate risk management champions and those that stepped in to proactively deal with risk matters, and to be transparent in telling the stories of those that achieved outcomes of highly achieved and outstanding on their risk rating. Now, I'm interested in the concern expressed by the board in that second paragraph that I just read to you, the concern that it might inhibit employees from proactively stepping into risk issues. One of the intended consequences of the BEAR is that there will be a greater degree of individual accountability for banking executives. Do you agree?
Clearer, I would say clearer. But yes, clearer.
You would not say greater?
No, I would not say greater, I would say clearer.
Both APRA's information paper, released in April this year, are you familiar with that information paper about remuneration, Dr. Henry?
You might have to get it up on screen.
Let's leave the remuneration paper to one side for now. The final report of the CBA Prudential Inquiry had been released in May.
Yes.
And what I want to suggest to you is that that document, and I did want to suggest the remuneration document as well, made it clear that APRA expected that remuneration consequences would reflect accountability for risk-taking. Do you accept that that was APRA's express position?
Yes, I do.
And do you agree that one of the downsides of that approach is that it may inhibit employees from stepping into roles requiring individual accountability? Is that your position?
This is a consideration. This is certain, as you know, this is not what drove the board's decisions.
No, but I'm interested in these sentiments.
It's a consideration, right?
I
It is a
want to
consideration.
understand if your position is that a downside of this sort of remuneration approach is that it inhibits employees from stepping into roles requiring individual accountability.
Right. So, if the practice of the business is that when somebody steps into a role and discovers a mess, and this happens, and that mess is not remediated in a sufficiently timely fashion, and the board then exercises draconian consequence, then of course there is a risk that others would be disinclined to accept the challenge of going into a business that might have such problems lurking, of course, and that's obvious. And that's all this was really trying to say, and it was saying that accordingly, the board, if it is going to exercise draconian consequence, as we did on this occasion, then the board should balance that by celebrating risk management champions on the other side, so that we were sending appropriate messages throughout the business to encourage the right sort of culture and people being prepared to shoulder the accountabilities. That's what it's saying.
Well, can I put a proposition to you and see if you agree with it, Dr. Henry?
Yeah.
If a person is not willing to accept accountability for risk-related matters, then they should not be an executive in a financial services institution.
That's obviously the case, absolutely. That is obviously the case.
So either a person is willing to be accountable for the proper management of risk in their area of responsibility, including the risk of misconduct,
Yeah.
or they shouldn't be in a position of responsibility in the bank. Do you agree with that?
Well, yes, I do agree with that, but the problem is that doesn't solve this problem. That doesn't go anywhere near solving this problem.
What problem, Dr. Henry?
The problem that you may have a part of the business in which serious problems are
There's
lurking.
a mess there already, in
Yeah.
your words.
And nobody wants to take over leadership of it.
I'll tender this document, Commissioner.
Minutes of NAB Board to October 2018 NAB 007074 0001 Exhibit 7.106.
And before we leave this document, Dr. Henry, we can see on the right-hand side of the screen at the moment, at 0009, that the board also considered the report about the bonus pool,
Yes,
and the board wasn't happy with management's recommendations about the bonus pool,
that's correct.
and the board had made that known to Mr. Thorburn during a private session.
Yes,
And we can see the minutes record that as a result of that feedback from the board, Mr. Thorburn presented revised recommendations.
yes,
He recommended that the bonus pool would be 70% for the executive leadership team and 85% for all other employees.
yes, yes.
And the board approved that recommendation.
At that time, there was a subsequent adjustment, of course.
The board decided to release all deferred remuneration that was scheduled for vesting in November this year. If it assists you, Dr. Henry, it's the second dot point at the bottom of the right-hand side of the screen.
Yes. Yes.
Yes, and then over the page at 0010, we see a note about the subsequent events that you
Yes.
referred to.
Yep.
And we see from that note that at a meeting on the 30th of October, the board decided to revise the bonus pool amount for employees other than the executive leadership team down to 80%.
Yes.
And on the 7th of November, it decided to forfeit the deferred variable reward for certain former executives.
That's correct.
So what changed between the start of October, when this meeting was held, and the dates on which those decisions were made?
Simply that it's at the end of that month, October, that we finalise the decisions, that's all.
So the board shifted its position from that expressed in the meeting.
Yeah, that's not unusual, but yes.
And why did the board decide to adjust the overall bonus pool down further?
We wanted to make an adjustment for risk matters, a kind of risk overlay adjustment, if you like.
And what were the risk matters that you were adjusting for?
The ones we've been discussing all day.
The advisor service fees issues?
In part, but beyond that, to conduct issues.
Yes, I just
And
want
I should say, sorry, both compliance and conduct issues.
we don't have the benefit of minutes of a meeting at which that decision was made. So I just want to be clear about what the matters were that factored into that
Yeah.
decision.
Yeah.
You say it was in part the advisor service fee and plan service fees issues.
Yeah.
What were the other matters?
Well, the business's general performance on both compliance, risk and conduct, by which we mean fair treatment of customers.
And who were the executives whose deferred variable reward was forfeited by the board?
I'm pretty sure you have that information, don't you?
That's not recorded in the minutes. Do you know who they were?
Well, honestly, I'm struggling a bit. But one was a person who had executive leadership of the Introducer program, which
Yes.
the Commission is familiar with.
The former CEO?
Another is the former CEO.
The former
Oh,
executive?
so you do have it, yeah. Okay.
Well, I want to understand if this is correct, Dr. Henry. the executive in charge of technology and operations.
correct,
As a
yep.
result of the AUSTRAC issues.
Yeah.
And was it Mr Hagger in relation to the introducer program issues?
No.
Was Mr Hagger one of the executives?
Not, I don't believe, not in respect of the deferred adjustments or the adjustments on deferred remuneration. And the reason for that is that the consequence applying to Mr Hagger was reflected in this year's outcome.
Why did the board decide to change its decision about the release of deferred remuneration to those individuals?
I don't understand the question. The board has to come to a decision on these matters before the remuneration report is finalised, and
Yes.
we decided on reflection.
Yes. I want to understand what led you to make that decision. What were the reasons? What was the reason for the decision not to release any of the deferred remuneration, the advisor service fees and planned service fees issues?
Sorry, could you repeat that?
Did the advisor service fees and planned service fees issues lead the board to decide not to release deferred remuneration for any executive?
No, don't think so.
Why not?
Why?
Well, no, my question is why not? Why would you not, in response to those issues, impose a remuneration consequence?
Upon whom?
Well, surely there were executives in your business who had deferred remuneration that was scheduled to vest, who had some responsibility for the advisor service fees and planned service fees issues.
Who?
Well, you say there were none.
Correct.
None of your executives had deferred remuneration
None who was still with
scheduled
the
to
bank
vest.
had
And what-
deferred remuneration
and
scheduled to vest. Yeah.
What about your former executives?
I don't believe so.
You don't
Not
believe
who had responsibility for ASF and PSF, no.
So you didn't have any former or current executives?
Current, yes.
Yes,
Mr Hagger.
yes.
And you've seen what happened, what the outcome was
Well,
for Mr Hagger.
I thought I understood your evidence to be that Mr Hagger did not have a decision made that had the result of his deferred remuneration not being released.
That's correct.
So
But he did have a consequence with
Yes.
respect to...
I'm focusing on a particular consequence, Dr Henry, which is the power the board has to decide that deferred remuneration
Yes.
will not vest.
Yes.
Did the board exercise that power in relation to any executive for the advisor service fee and planned service fees issues?
No, there was nobody, there was no former executive who had anything on foot.
And what about
No former
Mr
executive had responsibility for ASF,
What about
PSF who had
Mr.
anything
Hagger?
on foot. Well, I've already explained. We decided, of course we could have,
Yes.
but we decided that we would affect it in the current year.
And why not also affect it in relation to his deferred remuneration?
Well, of course we could have. We could have taken less out of the current year and some out of a former year and left him in the same position. I don't see what difference
Well,
it makes.
why not out of both?
Well, why out of both? I just don't understand.
To show the way the board treats conduct that leads to issues such as the advisor service fees and planned service fees issues.
I think that's very clear from the outcomes. Very clear.
Now,
Don't think anybody in NAB is in any doubt about it.
I want to look at the individual results that the board approved.
Yeah.
If we turn to 00100 and 0011 in that same document, there was an overall reduction. We see this on 0011 of 75 percentage points for Mr Hagger.
That's correct.
And how much of that was attributable to performance-related issues and how much to risk-related issues?
Overwhelmingly risk-related issues. In fact, wait on, we do know the answer to that.
Perhaps if we could have the headings brought up as well so that you can see
Yeah. Okay. Well, you can see it there, that's right. So he lost 50% of his at-target variable reward because of risk issues.
Thank you. And there was a risk-related reduction of 20 percentage points for Mr Gall, the Chief Risk Officer.
Yes, that's right.
And a risk-related reduction of 20 percentage points for Mr Lennon, the Chief Financial Officer.
Yes, that's right.
And both of those were for reasons related to the advisor service fees matter.
Yes,
And there was a risk-related reduction of 10 percentage points for Ms Cook.
that's right. And a further 25 for Mr Hagger.
Was the 10 percentage point reduction for Ms Cook for reasons to do with the advisor service fees matter?
Yes, it was, yeah.
Do you think those adjustments were sufficient, Dr Henry?
Of course I do.
Do you think that if the board had made similar adjustments in earlier years and more clearly signalled through those adjustments that the delays in resolving these issues were unacceptable, the issues might have been resolved earlier?
Yeah, they might have, yes, indeed.
Well, should you have made similar adjustments in earlier years, Dr Henry?
We probably should have. We probably should have, yes.
Now, I mentioned earlier that at the 2016 annual general meeting, you announced that NAB was going to undertake a review of its executive remuneration framework.
Yeah.
And the final topic I want to ask you about is the result of that process. You were involved in that review of the executive remuneration framework,
Closely, yes.
and you were involved in the design of the new framework.
Yes.
And it involves a number of changes from your previous framework, and I want to ask you about one of those changes, and that is the combination of short-term variable remuneration and long-term variable remuneration into a single variable reward. I want to put a series of propositions to you to check that I've understood the position correctly. Previously, your executives were entitled to two different types of variable remuneration, short-term and long-term. And part of the short-term would be paid immediately in cash, and part of it would be deferred for 2 years.
Well, no. The second part was deferred for 1 year and then the other half deferred for 2 years.
I see.
Yeah.
So part deferred for 1 year and part deferred for 2 years. And the deferred parts are paid in performance rights?
Shares.
Yes, that's what shares are? Is
No.
that, they're not paid in
No.
performance rights?
Shares.
So the performance rights don't convert into shares when they're vested? Is that not
If
how
they
it works?
vest, they do, yes.
Yes,
That's
so
right.
don't you get awarded performance rights that convert into shares when
Talking
they
about the
vest?
performance scheme, the...
Yes, I am.
Sorry. Yeah, I'm sorry, yes.
Have I got all that right?
Yeah. Yeah.
And they would usually vest at the end of 2 years. I'm still under the previous scheme.
So half would vest at the end of 1 year and another
and the
half
other
at the end
in
of 2 years. Yeah.
Unless the board decided to exercise its discretion to prevent them from vesting.
Yes, that's correct. Yeah.
And then the long-term variable remuneration was deferred for 4 years
Yes.
previously, and all of that was paid in performance rights that converted into shares when they vested.
If they vested. Yeah,
Yes.
subject to hurdles, yes.
Whether they vested depended, as you say, on certain hurdles that needed to be met at the end of the 4-year period.
That's correct, yeah.
And NAB changed those hurdles from time to time.
Yes.
But for the 2017 financial year,
Yes.
the hurdles were relative cash return on equity growth, which determined whether 50% would vest,
That's correct.
and relative total shareholder return, which determined whether the other 50% would vest.
Yeah.
So both financial measures,
Yes.
and in many recent years, NAB didn't meet the relevant hurdles.
Well, the ROE hurdle had only been there for 1 or 2 years. I'm not sure. Was it 1 year or 2 years? Anyway, it scarcely matters. The relative TSR hurdle that had been in place for many years, and actually there was an absolute TSR hurdle at one point as well. But anyway, NAB's share price performance was such that it rarely vested. In fact, I can't recall that LTI component vesting until this last year.
So that meant that the executives didn't tend to receive long-term variable remuneration.
That's correct.
But under the new system, there's no distinction between short-term and long-term variable remuneration.
That's correct.
All executives get a single variable remuneration amount,
Yes.
and part of that is paid in cash immediately,
Yes.
and part of it is deferred for 4 years
That's correct.
and then paid in shares.
Yes.
There are now no performance hurdles that determine whether the deferred part of the variable remuneration will vest. Is that right?
Not really. Or I could say yes and no. It's
Are there performance hurdles?
so, as you know, the on the deferred shares, with respect to the deferred shares, they remain at risk for the full 4-year period,
Yes.
and can be forfeited by the board at the board's absolute discretion for any reason, including risk performance, including matters that the board becomes aware of after the initial grant, which were not known to the board at the time, and also for a failure to meet the targets in the Accelerate 1 NAB plan, which include a mix of financial and non-financial metrics. And so one of the factors that the board would continue to assess over that 4-year period is TSR performance. So although it's true that there is no numeric hurdle that has to be jumped at the end of the period, it is not the case that there is no application of those considerations by the board to the amounts that would ultimately fall to the benefit of executive leaders.
You say those matters still factor into the board's discretion as to whether or not to forfeit the unvested amount?
Correct.
And is that formalised in any way, how the board deals with that?
Well, formalised, we have it written down somewhere, yes. Yes. Yeah.
But you don't have, you don't have any...
We are very keen to avoid a bit of arithmetic here, such as applied under the former scheme, for reasons that are clearly set out in our remuneration report. We and in any event, under BEAR, as you know, the board has to retain the ability to forfeit deferred amounts. That's the 60%. Well, we have 60%. BEAR actually requires only 40% for those below the chief executive. But the board has to retain the absolute discretion to forfeit those amounts for any reason. And so we can't tie ourselves to a particular formula, and we won't.
And is it the case that even after it's vested, the board has the power to require an executive to pay some or all of it back if issues are discovered later? Is that right?
In certain circumstances, we could claw back. That's our view.
What sorts of circumstances, Dr. Henry?
Probably the sorts of circumstances we've been talking about today.
You mean the advisor service fees
Oh,
issues?
not that particularly. I mean customer conduct issues, of which advisor service fee issues is an important instance.
Well, do you think there are circumstances in the past where the board might have clawed back variable remuneration had it had the power to do so at the time?
Quite probably.
And what were those circumstances?
with respect to former executives who had responsibility for the wealth management business.
And are you referring there to the advisor service fees issues or other issues?
Both.
Now, why did NAB choose to move from a short-term and long-term variable reward scheme to a single form of variable remuneration?
So, there's a significant problem with LTI schemes. Well, in fact, there are a couple of significant problems with LTI schemes, particularly those that are based on relative TSR hurdles. The first is that executives may place no value on them at all. Now, you may say, so what? But what is the point of having a substantial component of remuneration which executives don't value? There's no point having it. But the second is that those TSR hurdles are being assessed every year. There's always an LTI from a period 4 years earlier that is coming up for testing at the end of every financial year. And getting close to the end of the financial year, of course, executives will be aware, some more than others, depends who they are, but executives will be aware of where the share price is relative to the level at which the TSR hurdle would be met and the LTI would vest. And there is the real risk of inappropriate decision-making around those periods of testing. And there is the risk that executives will be constrained in putting recommendations to the board that are in the long-term interests of the business, but which might be expected to have an adverse impact on the share price in the short term. And these problems are well understood in the literature, in the construction of LTI schemes based on relative TSR. And we took the view that it was better, and in the spirit of BEAR, that the board take accountability for the performance outcomes rather than leaving performance outcomes to the interplay between the vagary of the markets and decisions that might be announced to the market in or on or around those testing times.
How do you think your shareholders are likely to respond to that,
Yeah.
Dr. Henry?
Yeah, this is a question that I've had in my mind for 2 years now. And of course I have met with our major shareholder groups on a number of occasions over the past 2 years, both in the development of the scheme and since the finalisation of the remuneration report in the application of the scheme. And there are different views. And we go into the AGM on the 19th of December this year with differences of opinion amongst shareholders, fund managers, proxy advisors, and so on. There's a mix of views. So some of our shareholders, including very major shareholders, are fully supportive of this scheme. In fact, had been encouraging us to move to a scheme such as this, and others are not. Others would prefer that that NAB executives be rewarded more in the way that they're rewarded, which is for outstanding share price performance. I understand that, but I've explained to you the reasons why we don't think that that is the appropriate way for our senior executives to be rewarded.
Could I ask that you look at APRA 008000010001, which is a note of a meeting between you...
Oh, this is a note for file.
Yes.
I was really interested to see this.
Oh, well, that's good. Let's talk about it, Dr. Henry. It's a meeting between you and Loveridge and Linda Dean, all from NAB, and Wayne Byers and 2 others from APRA. And so it's a note prepared by APRA about that meeting.
Yeah.
And I want to take you to the last heading in the note, insight into challenges faced by REMCOs. Now, the first bullet points appear to relate to things that you said during that meeting. LTI, long-term incentive, is seen as a lottery ticket, which seems a reasonable view given the vesting history at NAB. Is that your position?
I doubt that I voiced the stuff that's in the parentheses. I suspect that
I
that's
see. So the first part is something you said, and
Yes.
the part in parentheses is someone's extrapolation.
I expect so. A comment on what I said. Yeah.
And the second dot point, hence execs do not do not view them as incentivising, given hurdles are high. In addition, carrying the loss-making UK banks on their books for many years meant there was no chance of long-term incentive vesting. Are those your views as well?
Yes.
And the third point, asymmetry in valuation of REM. Execs assign little value to LTIs, whereas government and public just consider them to be part of salary. Is that your position?
Yes.
And then something further is attributed to you. It is very difficult to come up with a structure to appease all stakeholders. For example, this week you met with 2 investor institutions and discussed the potential move to a single remuneration element. One investor was very supportive, the other was against it. Does that reflect things that you said in this meeting?
And which I've said also here today, yeah.
So is part of the reason why NAB has decided to get rid of long-term bonuses because they don't do enough to incentivise executives?
It's one of the reasons.
And what behaviours do you say a deferred component of variable remuneration should incentivise?
We've been through this at some length. Behaviours that are in the interests of customers.
And do you think that your new remuneration model achieves that?
I do, absolutely I do.
And you might have heard that I asked Ms Livingston last week for her views about NAB's change to a single form of variable remuneration.
Yeah.
And she said that it had the risk of rewarding short-term performance and distracting from focus on the longer term. What do you say to that?
Well, obviously I disagree. I think I might have to have lunch with her and explain how it works. Yeah.
Part of the reason for the strike on CBA's remuneration report in 2016 was adjustments that CBA proposed to make to its performance hurdles for long-term variable remuneration.
Yeah.
CBA had reduced the amount of long-term variable remuneration that depended on TSR, total shareholder return. That was the evidence of Ms Livingston.
Yeah, I think there was more to it than that, but my
That was
memory's
one
a bit
component
hazy.
of it.
Yeah, okay.
But you've gone a step further than that. You've
Yeah.
got rid of the hurdles entirely,
Yeah,
so that subject to the board's decision as to whether or not to forfeit the unvested amounts,
yeah.
the entirety of the variable remuneration will vest.
I'd put that the other way around, actually, but still, yes, it will vest subject to the board's decision. The whole lot is at risk. Yeah.
But without hurdles that are transparent,
With hurdles that are applied by the board.
but not transparent to the shareholders.
No, that's not. Well, the shareholders are aware of the factors that the board will take into account.
But there are no hurdles that are transparent to them that need to be met for that remuneration to vest. Do you agree?
There's no share price hurdle, either absolute or relative. That's true, although the Accelerate One NAB plan does have in it that LTI performance should improve relative to peers, so that's one thing. I think shareholders are capable of understanding what that means without us being prescriptive about a particular hurdle. And we're not going to be prescriptive about a particular hurdle for the reasons that I've mentioned.
So I asked you earlier what you thought shareholders would make of this. Can I ask you whether you think that the two strikes rule requires boards to focus too much on financial measures in the design of their remuneration systems at the expense of measures that are directed to things like reducing the risk of misconduct or ensuring good outcomes for customers?
My personal view is yes.
You think that it does require too much of that financial focus over those other measures?
I do think that's the case, yes.
So do you think that any changes should be made to the two strikes rule?
Yes. And let me put it this way. The two strikes rule would never have been legislated in today's circumstances.
So what changes do you think should be made, Dr. Henry?
I really don't know. I've thought a lot about this. I really don't know. I think that, as I said yesterday, boards have to accept that they have an accountability for matters which go beyond the financial performance of their business in a particular year, and the share price performance in a particular year. I think that is the case. I do think that's the case. How that is operationalised in a way that has the relevant stakeholders holding the board accountable for its performance, I don't know. And that really is, in my view, your challenge, and I think it's really hard.
All right, Dr. Henry, I have no further questions.
Yes, Ms Harris.
Just one matter, Commissioner. Can we bring up Exhibit 7.88 NAB 007 049 0092/E? Dr. Henry, do you recognise that document as one with respect to which Councillor Assisting asked you a number of questions?
Yes, I do, yeah.
Yesterday?
Yes.
And you see in the middle of the page, about the fourth paragraph, there is a reference to early activities to drive mobilisation.
Yes.
And Councillor Assisting asked you what the plan was for activities to drive the mobilisation of the culture that you're looking for. That's at transcript 7111. Do you remember that?
Yes, I do remember that, yes.
Now, Councillor Assisting took you to a number of the one of the appendices, I should say, to this document. I'd like to show you several of the other appendices to that document. The first is at 0096. And perhaps that can be brought up alongside 0097. So that's 0097. Can I show you 0096 as well? Can you read those, Dr. Henry?
Yes, I can. Yeah, thank you.
And do those pages help to explain the way those activities to drive the mobilisation of culture will occur?
Yes, they do. Yes.
And can you outline briefly for the Commissioner how those documents do so assist?
Well, in the page on the left-hand side, we can see the activities that are being prioritised for next year.
When you
Yeah,
say
that's-
next year, Dr. Henry, do you
Oh,
mean...
well, it's actually the current year, of course.
Yes, thank you.
I'm sorry. For fiscal year 19, which is the year that commenced on the 1st of October. And then the next page takes us through the timeline for the first 2 quarters of fiscal year 19 and then the second half of fiscal year 19. And Some of those are in the mobilised space and some are in the embed space. Yeah.
And can I ask, Dr Henry, was the board satisfied with that as a plan for, as a program for the mobilisation of those activities and the embedding? of
Yes,
that project?
absolutely. Yeah.
Thank you. No further
Thank you.
questions, Commissioner.
Yes, thank you, Ms Harris. Ms Orr, the note
didn't-
for file.
I didn't tender the last document. I apologise, Commissioner. The APRA document, the note for file, which was APRA 0800 0001 0001.
Comes exhibit 7.107.
And Commissioner, I need to tender 2 statements from a NAB witness that dealt.
Indeed, Dr Henry.
We can. I have no further questions.
Dr
for
Henry, thank you very much. You may step down.
Thank you.
NAB provided 2 statements from Linda Dean, Lynda Dean, the first dated the 2nd of November 2018.
That statement will become exhibit 7.108.
And the second dated the 16th of November 2018.
That statement will become exhibit 7.109.
Thank you, Commissioner. If that's an appropriate time, we
Yes.
could resume again after lunch.
2 p.m.
Thank you, Commissioner.